Welcome back to another market closing live stream. This is going to be the biggest week of earnings in this entire earnings season. Not only is this the biggest week of Tesla earnings season, of earnings season in general, but Tesla is reporting today, which of course we will be covering live the second we get Tesla earnings. We will be covering those. We are starting the market closing live stream a little bit early today, so that way we can also review some of Tesla's earnings numbers from a previous quarter. We'll look at their previous earnings numbers so we can grab their sheets a little bit. We'll go through them a little bit. We'll go through some of the sticks. We'll do sort of like an earnings preview. We already know how many vehicles they delivered, so we'll get to do a lot of things here. But we'll grab their investor presentation as well. We'll be on the earnings call. It'll be fun. We'll be hanging out for a while. So let's get right into some of the things that are happening. First of all, not only is this a massive week for earnings, but remember what's happening in the marketplace right now. You've got suits who have shorted the crap out of this market because they don't believe that earnings are going to come in strong. They think that, hey, we got long positions, we're good here. We think that earnings are going to come in a whole lot weaker than people expect. And when those earnings come in weaker, we want to be protected with shorts. This has removed buying pressure, but also added to selling pressure. Both of those things have led stocks to kind of sell off, not just the last 2 months, but also specifically ending on 420, which remember 420 was the big day that I sold a bunch of stocks at the bottom to buy a ton of options and end up having more exposure in the market, basically at least what now in the short term looks like may have been the bottom here in recent weeks. So we got 57 minutes to the close, and today is going to be the start to us really seeing, were these option moves a good thing? Was it a good idea to be bullish or not? Or is tech going to disappoint? Because remember, we've got Alphabet reporting this week, Google, we've got substantiated rumors so far that Amazon might split or announce a stock split on Thursday. That's obviously massive news for a stock that has been extremely expensive. It's been extremely expensive for people to buy options on. Leaps have been pretty much unaffordable for most people on Amazon. I think I have like one leap because the thing's like $3,000 a share, and these are contract values at 100x, right? So you've got a lot of things to consider here when it comes to a potential for an Amazon split. I mean, think about the fact that when Apple split, stock price did phenomenally afterwards. When Tesla split, stock price did phenomenally afterwards. Both of them did really well, and both of them have somewhat sustained their runs after those stock splits. So we're going to keep an eye on Amazon this week as well. But imagine if all of these fail this week, we're going to be in a whole world of hurt if they all suck. Like if all of the earnings miss this week, my options are going to suck. They're going to be on fire. The bets that I made are going to suck. The shorts are going to be right. People are going to panic. It's going to be a disaster. But I have this belief that especially these big companies and the companies that are reporting this week are going to have that we're going to see some of the highest profits we've ever seen. I mean, think about the amount of people that were laid off that were not rehired. Hate to say it, it's extra corporate profit. It's exactly what we were talking about back in May and April of last year. All these layoffs are going to suck for workers. They're actually going to be really good for companies. When you combine the fact that companies potentially now have lower expenses with the fact that we are on a higher trajectory of growth than where we were before the pandemic. In other words, we're growing faster now than we would have if it were not for the pandemic. It kind of makes you go, oh, dang. Okay, maybe we do want to be on Train America, because right now America's kicking the world's butt on COVID, obviously with the exception of our big rival in China. And you've also got like Australia and New Zealand have been kicking butt. But in terms of economic power, U.S. and China are right up there. In terms of growth, U.S. is going to be a big winner this year. At least that's what I believe. Now, of course, we've got a lot of inflation expectations, but look, if you've been paying attention to the 10-year Treasury yield, which if you've been watching any of these live streams, you already know the 10-year Treasury yield has been trending down over the last month. If we get this continued downtrend, especially coming off hot earnings this week and Biden announcing more spending and potentially more taxes this week, if we get a fall in the 10-year Treasury yields after this week, woo, that's going to be a sign that the hedgies are going, okay, we've hedged enough against inflation. Now it's maybe time to start getting back in the market and offloading some shorts. I don't know. If things go really well this week, this could be the start of that recovery bull run. I think it's potentially a little early, so I don't want to call that. It might still be a little bit early because we do think it's going to be a few months before we get all the inflation data that we need. But strong earnings here could really put some concerns to rest. So this is a massive, massive week. Earlier in the market opening live stream, we saw a chart where they showed the market cap volume or value of all the companies reporting earnings this week. And this week, it's like $19 trillion of companies are reporting. 19 trillion. It's nuts. Obviously, Tesla, Amazon, Alphabet, right? And when we compare that to all the other weeks, this week has more earnings in value than any other week. It's crazy. Also, I want to announce something special. Right now, I mean, knock on wood, it's tentatively confirmed as of this morning. We will be interviewing the CEO of Mind Medicine at 11:30 p.m. Pacific time on Wednesday. And Kevin O'Leary will be joining. So make sure to also check out Kevin O'Leary. He's got a YouTube channel. But anyway, Kevin O'Leary and Mind Medicine together at 11:30 a.m. Pacific time on Wednesday. So mark your calendar for that. Make sure to subscribe. Not going to want to miss that one. That'll be really fun. But yeah, I'm very excited about that. If you are a course member, I've already set up the section in the course where you could start dropping in your questions and kind of voting on the top questions that you have. Obviously, I'd like to prioritize any of the course members. So check that out. And of course, use that expiring coupon code that is now expiring on Cinco de Mayo, 39% off. Okay, let's now take a look at the sticks a little bit. Then we are going to get into the slide deck a little bit on Tesla. So let's, I want to first say Microvision, folks. Microvision just got the CNBC pump. Like it literally got the CNBC pump within the last hour here. So if you are a Microvision investor and you have been waiting for the CNBC pump, it just happened. It literally just happened. They, about what, 45 minutes ago or whatever, this guy goes on CNBC. Oh, people are investing in this company. It's Wall Street bets, but it's not just Wall Street bets. It's the traders are putting GameStop down, and now they're focusing on Microvision. Microvision's the next GameStop, but it's not just the stock that people are loving. It's the technology. And then he said the golden word. Then he goes, they're getting into like tools for autonomous driving, and like literally, this was the best possible sales pitch you could have asked for if you were a Microvision investor on CNBC. I mean, they literally hit every freaking point about why Microvision is a buy right now. You know, LiDAR technology, autonomy, EVs, blah, blah, blah. It was like, I mean, it was really, if I was a Microvision investor, I'd be watching that interview and be like, this is the best freaking pump I've ever seen in my life. As a result, Microvision is up, not 20%, not 30%, but 50 freaking percent today. The thing smashed previous all-time highs at 24, smashed right through it after the CNBC pump. I mean, we went from resistance at like 23 to 27, yo. I mean, whew, it's nuts. Some people are like, time to buy puts. You know, usually, okay, and not always, but usually after the CNBC pump, you get a little bit of a dump. So, I mean, look, I don't bet against the companies. I don't short them. I don't do puts. But yeah, I could see why some people would be very tempted to do that after a CNBC pump. But then again, oftentimes when you get these insane run-ups, puts already price in the fact that it's going to fall. I mean, that's what happened with Nikola. I did a video going, look, as soon as they have their dilution, this was back last summer before people even knew what a SPAC was. I'm like, folks, look at the S1. There's going to be massive dilution coming on this date. And my expectation is within X weeks or whatever, we're going to see a massive sell-off on Nikola. This is when Nikola was like $70 a share. I got so much hate. Thing goes right back down to $20 afterwards. The writing was on the wall. That was with dilution, though, and Nikola. And that was before the whole Scamala thing. That Scamala was just the icing on the cake. Microvision, I don't know. I haven't dug into the S1. I don't think there's any dilution. They want to get acquired. Their goal is to get acquired or partner with somebody. Nobody's partnered with them yet. Nobody's acquired them yet. There are always rumors floating around. But Microvision is also a big momentum stock, so you have to keep that in mind. It is a momentum play. I bought this thing at $7. I sold out at like 21 or 22. I made like 200 grand on the stock. I love the stock because of that, okay? Yeah, wow. Woo! All right, what else we got here? So Mind Medicine, 35%. Remember, tomorrow is the I'm pretty sure. Maybe somebody fact check me if I'm wrong, but I'm pretty sure tomorrow is the uplisting date for Mind Medicine. And that does mean there is the possibility of a buy the rumor, sell the news on a Mind Medicine tomorrow, or if options open up and people get some more, now people on the Robinhood and Webull or whatever can buy, maybe it'll just keep going. It's also entirely possible. Naked up 24%. BNGO, look at the momentum plays move here today. OCGN, you've got ZOM, AMC, Naked, BNG. Today, folks, is a momentum day. Cost, GameStop, Luminar. Who remembers like a week ago? We're like, oh my gosh, everything momentum has been getting battered for weeks upon weeks. It's crazy. Momentum today is on. This is why you gotta buy the dips, even when it's painful. I get the same crap all the time. People are like, oh, I've been buying the dip, but it's a 7-layer dip. Well, it sounds like you're being a little impatient with your tendies. I'm tired of being a bag holder. Well, days like this that make you wish you bought the dip. Now it's like, man, I wish I could still buy Microvision at $7. This is why we call the course Stocks and Psychology of Money. Anyway, 12.4% on Churchill Capital. Nano Dimension up 10%. It's funny, this morning I said Nano Dimension's going to end up following Microvision. I still believe it can. I mean, watch Nano Dimension's going to go to 16 again. If you're looking for a momentum play, I would be paying attention to Nano Dimension as another potential. No guarantees, and I haven't done any TA on it. I'm just saying, you see some of the momentums run, the others start running, and we talked about that this morning in the Market Open live stream, which means it was probably, somewhere around here, 790 or whatever, something like that. Anyway, Vuzi, 9.7%. Redfin's almost up 10% today. Smoking today. Yeah, Voyager Digital, 9.19. Skills up 9. Even there goes Gevo, too. Gevo's another momentum play that has some possible moving there. It's crazy, folks. All right, what else we got here? We got ChargePoint, 8.41. MP Materials, 8.28. NGA almost back up to 20. You've even got Nickel up here, Arcimoto's up here, Shifts up here, EXPI. All of the stocks that have been killing our portfolios for weeks upon weeks are giving us a return. They are turning around here. Another momentum play here to watch, Upstart. Upstart went down to like 95 for a moment there, and we're like, they usually swings back. As a long hold, it was something I was considering under 100. Neo, 4.4%. Lemonade's even up 4%. You've got Invite, Twilio, Enphase up 4% again. My goodness. Every day since I bought that option, it's just been green on Enphase. At least it's felt green on it. It's just been nuts. Square's been going up. Palantir's been going up. I mean, it's beautiful. It's a beautiful day. Sometimes beautiful days are followed by bad. Keep in mind, anytime we've had these green days before, it's kind of like, I don't know, is it a bull trap? What's going on? But that's what we thought Friday. And we got a second day of green in a row here. Tesla's at 1%. Options activity is implying a 6% move to the up or downside on Tesla. A 6% move on Tesla, that's, 30, 40 points in either direction. This could be sitting at 690 very soon after earnings here. Or we could be back to, 770-ish pretty quick. So these earnings are going to be something, all right. And we are going to be not only going through earnings, but we will be going through the earnings call, which I'm excited about. So buckle up for that. Let's go ahead and take a moment and just look at some of the numbers that we're expecting for Tesla. So something you can do is you go Wall Street, analyst, expectations, Tesla. Usually the Wall Street Journal has a good sum. Yeah, it's actually the first result. So take a look at this. Okay, let's take a peek here. So what are we expecting? So we are expecting Q1. All right, here we go. All right, so these are the things you're going to want to write down. So Q1 estimate trends. Current 0.75 cents is expected. And we have, do we have other? Sometimes it's nice to get a little bit more data here. Quarterly, no, okay, it's just going to give us a quarterly estimate on EPS here. All right, I was hoping for a little bit more on the estimates there. So I'll dig around for a little bit more of the estimates. Quarterly, yeah, 0.75 cents, so 75 cents there expected on this Q1. It's going to be big. We'll see how it goes. Let's jump on over for a moment to the, give me 1 second here. We're going to jump on over to the sheet. There we go. So this is where we have Tesla's deliveries. We've got almost 185,000 deliveries. We're going to expect to hear a lot of updates at Tesla today, not only on this S and X refresh, especially since the S and X, keep in mind what they're doing with the S and X, folks. It's absolutely brilliant. With the S and X, they're literally putting in the same steering wheel, the same consoles, the same screens, everything, which right now they have different screens, like the Model 3 and the Model X have totally different screens. It's all getting standardized. The S and X are getting the same steering columns, the dashboards, the monitors. Everything's going to be the same between the S, the X, the Cybertruck. I mean, it's nuts how they are standardizing their cars. I mean, ask yourself this. Which Ford car has exactly the same dashboard and center console and little computer thing, or Volkswagen car, as the next one? No, they're all different. They're all custom parts. This is how Tesla is going to get to Elon Musk's goal of 30% margin. And folks, that is going to be a huge, huge thing to pay attention to here. Obviously, we already know what the deliveries were. Expectations were 174,000, came in at 184.8. So obviously beat expectations there. When we get to our Q4, these were the last financials that we have. The biggest number that we look at almost regularly here. And we could take out regulatory credits, which is usually what I like to do. I'm not so jazzed about doing the math right now. I might do that on the side here in a moment. But we want to look at this automotive gross margin section. In fact, let me go ahead and do the math. I want to listen to this for a second. We're going to jump for a moment because here's an ARC talk on skills. Hold on 1 second.
Platform for making this game. Can you just confirm that this is a real thing?
Yes, absolutely. It's a real thing. I'd say even more broadly, these short reports, they have numerous errors and misleading statements that
the shorts are everywhere.
Come from a fundamental misunderstanding of our business. Institutional investors like Kathy have been really supportive in calling us out, which we certainly appreciate. Look, we're not sure how these reports arrived at their conclusions, but the claims aren't just flawed. They really don't reflect what we're seeing or what we're doing. And at the end of the day, we'll be reporting earnings next week, and I think our earnings will tell a different story.
One of the positives, Andrew, for your company and your stock relative to some other mobile gaming platforms is your conversion rate, or the stickiness of your customers. Talk us through why you think that is the case, and whether it can even improve from here.
So yes, fundamentally, the reason Skills is so successful is we're converting about 8 times as many payers per 1,000 consumers that use games on our platform. As the next best alternative, which would be something like in-app purchasing. When you think about the reason for that, it's really because we're providing a better value proposition to the consumer. We're offering them fair, fun, and meaningful competition in their favorite games. And we've completed now 3 different market research studies that show that willingness to pay is actually upwards all the way to potentially 40% of consumers. So we think there's a lot of room to expand from here.
What about the questions on revenue recognition, on accounting, comparing you to other frauds? What do you
comparing you to other frauds?
Are you considering legal action?
I understand the verbiage because the short sales are comparing you to other frauds. I get it.
It is these short reports are without merit, and they arrive at conclusions that simply do not tie out against the business that we're building. We followed a similar approach to other marketplace businesses, whether Uber or Lyft more recently or others.
Okay, I'm going to pull down off this, but yeah, you're definitely getting a skills pump right now off this CNBC interview. You see that here. This is so common. These things go on CNBC. They talk up the stock and the stock pumps. It's so common. It's dime a dozen here. Okay, let's go back to Tesla for a moment. Very, yeah, the look on the CEO's face. I don't know, the way Sarah said it was just funny. It was great. Okay, so these are annual figures here, right? So annual, what I did basically is this is the total revenue for Tesla up here. So all the money they get from their cars right here. These right here in green are the regulatory credits. And what we care about really is this margin number, without the regulatory credits. So if you take out the regulatory credits, assuming those are gone, you get about a 21% margin over here on the vehicle margin, and also about 21% right here. So we really want to see that move. Like if we could get that margin up, and see where we might actually see that is we're expecting huge numbers to come in from Tesla China. And whether or not we'll see those broken out as detailed as we'd like, we're not sure. But the numbers that we get from Tesla today, we got to pay attention to that margin. If that automotive gross profit margin net of regulatory credits skyrockets up to say 23, 24%, because all of a sudden all they're doing is basically printing tendies, the Model Y and the Model 3, and they've got these assembly lines really efficiently dialed in. And yeah, sure, the S and X aren't up and running. That could hurt profit margins a bit. But if we see those profit margins going up solely off the printing of these cars, woo! Man, I think Tesla could have a real potential to move. Another area that we really, really want to pay attention to when it comes to Tesla is going to be on their energy. So I want to run over to energy right here. Folks, I tell you, people underestimate the crap out of Tesla energy. They just don't understand. I don't know if it's because they're not in California or they're not in a state where there's lots of sun, where solar makes sense. I have no idea, okay? But Tesla's solar system, I've said it so many times before, their monthly payment system is a Trojan horse for big old tendies, and nobody believes it. Now Tesla has basically told us, they haven't said the part about demand, but I'm going to impute that. I think they're basically saying there's so much demand for their solar now, and regularly they're booked out many, many weeks, if not months. So I'm assuming that there's a substantial demand. But there's probably so much demand for these solar panels that, and this is what Tesla actually said, Elon Musk came out and said, we are now only selling solar panel either subscriptions on the payment service or in full if you buy a Powerwall. Powerwall is where the profit margin is. You think you can make profit off solar panels? Come on, man. Those solar panels are so hard to make profit off. This is why Enphase, one of my favorites in energy, does not do solar panels. They do the high margin stuff, the battery, the inverters, folks. That's where the money is in the energy space. That's why I love Enphase so much. It's also why I love Tesla so much. Tesla took their Solar Edge inverter. Now they're doing their own inverter in-house. More profit margin for Tesla. Absolutely incredible. But people are so underestimating the fact that even Apple is now incorporating the mega packs as battery backup systems for the Apple campus. I mean, this is freaking insane. And I try to look for bad with Tesla all the time. I'm trying to look for bad. In fact, I posted on just this morning, so I was really late about it. I should have asked it earlier. But there's this website called Say Technologies where you can vote on submitting a question for earnings. And I asked a question about, which I think is probably one of the most important questions. Oh, wow. People have already upvoted it a little bit here. So, okay, I asked a question, was autopilot on in the Texas crash in April 2021 at any point prior to the crash? And that to me is a big question. We want to know, was it on at any point? That to me is juicy. So we'll see. Okay, what else do we have here? Let's go back into there. This is Say. Okay, let's go ahead and go back to this right here. So what to me is extremely underestimated, very, very underestimated, is right here, solar deployed. This is going to be huge. And storage deployed. My goodness. This is where I think massive attendees come from. I'm very, very enthusiastic about this and seeing what happens in this growth. I mean, look at, first of all, the growth that we've seen here. This is Q4. Q4, we saw a doubling in the storage systems being deployed. What if we see another doubling there and we actually start seeing some real profits from these? It's going to be another big profit potential here. We will, though, see for the quarter, these S and X deliveries suffer a lot. We did see, regardless of these basically going down to production 0, deliveries 2020. So what we're going to see here is we're going to see 2020 S and X, and then the rest is all going to be 182,780. 182,780 right here is what we're going to see for the S and X. I mean, it's going to be wonderful, but we really want to see the margin. That's going to be big. So we already know those numbers. So those are the two big things that I'm paying attention to: margin and the energy deployment. So margin on their vehicles and energy deployed. So that'll be very exciting. Okay, let's go ahead and tune in here to CNBC. No, okay, they're talking about police and politics here. Let's see if the Clement Con. Nope. Okay, fine. What about? Okay, literally, I swear, Bloomberg and CNBC and Fox, they time their commercials. It's crazy. They're all on commercial right now, so no problem. Let's go back to the sticks for a moment. We are about 34 minutes away from the close, so let's go ahead and jump on over here. What do we got here? So we've got, here we go, Microvision. Microvision consolidating a tiny little bit after the big CNBC pump, 34% on Mind Medicine. You've got 22% on UTime. BNGO's up substantially here. OCGN's pumping a lot. Churchill Capital up even more, up to 13% here. GameStop 13%. Nano Dimension 11%. Redfin 10%. I mean, really, really incredible. Shift Technologies up. EXPI is up. We've got Neo at 4.7. Also moving up. Enphase 4.2%. Arc Genomics 3.5%. Palantir 3.23%. Tattooed's up to 6%. All of the options are looking nice. Tesla actually moving up here before the bell. Very, very exciting. We've got Spirit Air and some of the where are the airlines today? The airlines were supposed to be really juicy today. After not Delta Apparel, after the news about vaccinated folks being able to get into Europe. Only 1.6% on Delta here. We've got Palantir at 1.8. United's only 1.1. Yeah, and then Etsy's still kind of selling down a little bit after the analyst downgrade. So honestly, a little bit of an overreaction in my opinion, but still not under our 200 where I really like buying this. So somebody here says, oh, this is interesting. Somebody says they are an electrical engineer working on the electric grid, and I'm bullish on Tesla Power Bricks. So they're doing very cool cutting edge work. That's awesome. Love to hear that. Thank you for sharing that. Somebody says they're selling everything today. We're going to see red for the next few weeks as someone. It's quite possible. Totally possible if you think that. I mean, today's one heck of a rally. You never know. Never know. All right, let's see if we can get Sarah back on CNBC here. Nope, we're still on commercial. Okay, 31 minutes to the closing bell. Tesla, folks. Woo! I'm excited. I'm trying to see. Let's see if we can get a margin on energy? That'd be cool. So solar deployed, storage deployed, supercharging stations. Let's see here. Probably have to go into the actual earnings report to get the margin on energy. So I'll pull that up. But and of course we'll pull up the new report as well. But the margin on energy has been pretty low. It's lately they've kind of been almost break even. But we're really expecting margin on energy to start contributing not only to their free cash flow, but also to just their overall profitability, which is going to be incredibly exciting. So we'll see how that goes. All right, what else do we have? So, all right, let's tune in here for a moment. Let's see what they got over here.
Welcome back during Hollywood's biggest night. Cinemark and IMAX getting nice bumps too. Cinemark better by 4.5%. IMAX up 2.6%. But getting an even bigger bounce at this hour, Casper, the mattress maker, springing to its best intraday gains
29%.
in more than a year after Wedbush upgraded shares to outperform. Casper up 29% right now as Wedbush predicts it'll take more market share as it broadens its product lines. And of course, the demand rush from new homeowners keeps the mattress market wide awake. We should also check on sort of the traditional names here. Sleep Number and Purple Innovation. Sleep Number right now is up 1.25%, resting easy there, but Tempur Sealy and Purple Innovations are both slightly down. Purple Innovations down about 0.25%, Tempur losing 0.75%. Luminar taking its laser focus from the roads to the skies. The LiDAR giant stock is soaring 14.5% right now. On news, it's joining forces with Airbus's autonomous flight tech unit up next. The focus of the partnership, improving safety and increasing the number of autonomous flight vehicles in the market. Nice move for Luminar, ticker symbol laser. Airline stocks, let's look at those. They are taking off after EU officials say vaccinated Americans should be able to travel.
See, we already covered this.
By this summer. Everybody's higher except for Southwest at the moment, which is basically flat. But it's traveling.
Wait. Why? Look at this. Why are we all of a sudden getting red candles here? Look at this. Look at this. United Airlines just got a big old red candlestick here. We got a red candlestick coming in on CCIV. Luminars. Is everything going red here for a moment? Yeah, we got some red on Microvision here. We got SOS. Norwegian just went red as well. Boeing went red. Ubiquity. What happened? What just happened? I feel like we're getting a little bit of a... Yeah, see, look at that. Even at Tesla. That's interesting. Okay, let me try to pull up and see what's going on. Let's listen to CNBC for a moment here. Maybe they know. Nope, because they're on commercial. They don't know anything. Okay, very bizarre. Very, very weird. All right, we can also pull up what other earnings are today. Mostly we're going to be focusing on Tesla. So earnings calendar. Let's go. So I don't see anything super recent here. Yeah, it's the suits again, huh? Very possibly that the suits are coming in, taking some tendies off the table. I mean, this is a big move here right before the close. Yeah, okay, MindMed's still up. So it's not everything. AMC trending down. It's maybe the day traders taking their tendies, you know? But, maybe some... we do have 28 minutes left. It's weird. That happened like right at 12:30. Right at 12:30, we start seeing this downtrend. Yeah, look at that. It's almost like it's bots. Bots were programmed. Just start selling off 30 minutes before the close. I would not be surprised, honestly, that you get bots that just, they buy 30 minutes after and they sell 30 minutes before. It would not shock me. And then it's like, go trade in the meantime. Everything is kind of showing us the red candles on the downside here. Get out of here, Delta Apparel. It's supposed to be Delta Airlines. There we go. All right. Well, Lemonade. I mean, this is absolutely incredible. So let's see here. What else we have? Okay. All right. So let's take a peek. We are looking at the watch list here. On the green side, we're still pretty green day here. Definitely had a little bit of softness there all of a sudden. Again, I think this must have been programmed profit taking or something. Somebody's asking if Biden's on TV. Oh, no. Wow. Yeah, very, very intriguing. So, what else? Let's see. EXPI, SteelX, yeah, Workhorse. No, it's hard to see it everywhere. You certainly saw the drop in the airlines. See it at Lemonade. Coinbase had the same drop. Canoe had the drop. Enphase had the drop. They all had the 12:30 lunch drop. All of them. Invite, Square. This is bizarre. Just out of nowhere, you all of a sudden get this 12:30 drop. It almost makes you wonder if you're a day trader. You almost want to write down 12:30 and maybe close your positions before 12:30. Jeez, man, don't ride that to the end. Oh, look at the SPY. The SPY's down a chunk over here. What from looks like we were sitting at about 418 comfortably, and then all of a sudden we got yanked down like $1. And let's do Dow Jones. Dow Jones Industrial Average. Dow, same thing. My goodness. Really, really incredible. Wow. All right. So, All right. Let's see what do we got over here. What's this? Roku warns YouTube.
Nomadland with 3 awards total is streaming on Hulu and Disney Plus won its first 2 awards for Soul. Meanwhile, Amazon also won 2 Oscars last night. And Netflix, which went into the awards with the most nominations of any studio, 35, it did bring home the most Oscars of any studio, 7 in total. That reflects Netflix's investment in original content, as well as the dominance of streaming in a year when most of the theaters were closed. But Sarah, last night people may have been watching Netflix instead of the show because ratings declined 58% from last year. Guys, over to you.
I was.
A big. You were watching Netflix or the awards?
Probably. No, Netflix.
Netflix. I was watching the awards until my friend Emerald Fennell won her award. Congratulations.
Which is awesome
to
that you have
her.
a friend.
And then I did switch off. Thankfully, she was early on in the ceremony. Julia, thank you so much. Joining us for more, Ben Silverman, Propagate Chairman and co-CEO and former co-chairman of NBC Entertainment at Universal Media Studios. Ben, good to see you. Thanks for joining us.
Of course. Great to see you guys.
So why don't we...
All right, we're going to pull off the Oscars talk here. Let's go back to stocks here. Let's pull off this. See what we got over here. Okay, commercial over here. What is this, like a suggestion that we're about to have heartburn? Okay, what do we got over here?
Relocating their main corporate headquarters in Cupertino, California. I think that was a $5 billion project. That was opened just a few years ago. They're in the midst of working on $1 billion campus opening in Austin, Texas. And now, as you mentioned, and Apple announced this morning, a new $1 billion facility is in the works in Triangle Park in North Carolina. And what's interesting to me is they're establishing these significant offices and headquarter type campuses really across the country. Now we have the West. We're working on the center of the country in Texas, and then North Carolina and the East Coast is to follow. And I think it really is an indication of the commitment they have to office space, to people being in the offices and collaborating, but also giving people opportunities to be with them in a variety of places across the country. These are the most significant, of course.
Interesting comments. Scott, I'm trying to think big picture here. How do you value, if at all, as you're looking at valuing a company, looking at the fundamentals, a company's CEO, i.e. Tim Cook, and the relationships with the politicians, where we think of all the big tech companies, Tim Cook has maybe done the best job in keeping politicians on his side when all of the rhetoric has been so anti-big tech. Do you take that into your analysis?
Yeah, look, there's no question. And I think the flip side of that is really what are the risks associated with companies, frankly, being in the crosshairs of regulators and politicians. And there's no question that when you look at big tech and you look at companies like Apple, I mean, they've increasingly been scrutinized and questioned and even penalized for not just how big they are and how successful they are, but some of the practices that they've been engaged in to enable them to get that market power, to keep it. And so putting out something like this, where you see Apple doing so much, not just to invest in its own company, but to invest in communities around the U.S., I think, frankly, that makes them more appealing as a citizen of our nation rather than, an enemy of the people, so to speak.
Scott Kessler, Third Bridge. Wonderful comments. Thank you for joining us. And Caroline, of course, we take this back to the markets, and we'd started at the bottom of the hour up about 0.08%, and we're slowly trying to climb our way back, Caroline.
Yeah, I mean, we're up 0.8%. We then
crashed
lost
back down.
most of the value.
Lost about
most of the value. Finger trade or something that's going on remain.
Oh, hold on. It sounds like we got potentially a couple going here at the same time. Let me fix that really quick. 1 second. Let's just jump on over here for just a moment. So I think there might be a couple Bloombergs up. That might be an issue here. Here's an NFT. Hold on. Let's listen to this for a moment here while we get ready for the closing bell.
Atari to Binance to the Winklevoss's Gemini and NFT super collector Whale Shark paying up major money for virtual land, pixelated land. But the Sandbox isn't the only virtual real estate seller. Decentraland has posted more than 55 million in sales. In fact, over the past week alone, Decentraland has claimed 2 of the top 5 sales in the NFT world, worth $412,000 and $280,000 respectively. What are we even talking about? To the founder of the site that tracks these sales, Dan Kelly of nonfungible.com, Dan himself just sold a plot of his virtual land for more than $100,000. Dan, great to have you. Just when people were starting to wrap their minds around digital art, virtual real estate sales are spiking. And this is land you can't touch or build anything physical on, but the hype is very real and the money's real. Can you just explain in a nutshell for our viewers what it is?
Virtual land is a place where you're free to build whatever you want in a metaverse, much like the internet, like a website. I mean, you're free to build whatever kind of website you like. You're not bound by building codes and by different restrictions that centralized authorities put on that kind of stuff. So the possibilities are endless in the metaverse.
But it's fantasy land type stuff, correct? But the money's real. How are people and why are people paying up big money to not just buy these plots of lands, but then trade them and, I guess flip them for even more money?
Right. I think there's a big play on the scarcity of these digital plots of land. I mean, in Decentraland, I know there are a little bit over 90,000 plots in the world. Much of that is owned by the Decentraland Foundation. But these are extremely scarce assets.
You gotta be effing kidding me.
Very limited supply of them. So people naturally are going to speculate on them.
Well, let's just explain a little bit here.
You guys keep betting on virtual land. I'm gonna go shop in SoCal real estate some more. This is scarcity and pixels. Come on. I mean, then again, maybe I'm doing but then again, isn't that the same thing as Bitcoin? I don't know.
Such purchase and transaction. Here's Decentraland. I guess it's estate number 1777. Just work with me here, viewers, please. Back in 2019, it was bought for $27,316. By 2019 August, that person sold it for $31,000 and change. And just yesterday, he or she then sold it for $280,000. What makes it valuable?
Well, there's a number of aspects. I mean, that particular estate, it's about, it looks like more than 20 parcels big. So every parcel in the land in the virtual world is 16 meters by 16 meters. So they have that large estate of land. It's by 2 roads, which is that light gray area. And then it's also by 2 very large districts. So there's all these different aspects to the location of that land in this virtual world that people give value to. They're speculating that there's going to be a lot of traffic in these districts, that there's going to be a lot of traffic on the main roads, and that's how they come up with these valuations.
Do you have to be an accredited investor to even start trading these things?
No, absolutely not. I think that's part of the beauty of blockchain is that you are your own bank and you're responsible for your own actions. There's no regulation around this stuff yet. So there's lots of talk about that. But as it stands today, there's no accreditation or anything like that.
There are, I think some sites do have it, but there is some concern from even people within the so-called metaverse. For example, CryptoVoxel's Ben Dodem, he is the founder of one of these areas where you buy and sell virtual. He believes that in a couple of months, we're really hitting a bubble and that maybe we might see that bubble pop. We could see a so-called crypto winter, which are these long periods of time, like we saw between 2018 and 2020, where prices don't even move and people could be hurt and lose a lot of money. What's the safety plan? Is there an off-ramp or an exit hatch?
No, I mean, and especially in NFTs, whereas like Ethereum or Bitcoin during the crypto winter, it was easier for people to get out of their positions. NFTs are they're fairly illiquid. Meaning that they are hard to sell unless you're selling it for a great price or that kind of thing. So it is extremely high risk. And if we were to come on to something like that, then yeah, it would be difficult to offload these lands quickly.
This is crazy. Virtual real estate.
Quickly, before we end here, how do we know that this won't become rife with all kinds of fraud?
We don't know. I think that's kind of the beauty of decentralized ecosystem. I mean, everybody has to keep everybody else in check. I mean, obviously, we're not claiming fraud against like Decentraland or CryptoVoxels or anything like that, but When it comes to peer-to-peer trading, I mean, people need to do their research. They need to come to nonfungible.com and check that at least what they're buying is within the market range of what those offerings are typically selling for. It's all about making informed decisions and being responsible, I guess, for your own actions.
Yeah, just don't sue the rest of the taxpayers when you lose the money. Dan, thank you.
Exactly.
It is a brave new, I can't even say world, metaverse, brave new.
That is weird. Weird. Wow. That's some crazy, massive price appreciation in virtual real estate. I mean, you're talking like 10x price appreciation in virtual real estate. You're going to have to get a mortgage for your virtual real estate soon.
Be able to offset some of the cost increases they're experiencing. Either it's in input costs like commodities, transportation, fuel, etc., or even now starting to come into the labor side. Are they able to put in pricing that offsets this, or does it lag a little bit? Maybe it shows up more in 2022 than the latter part of 2021.
All right, sit tight for 1 second, Tobias. We need to take a commercial break, but Tobias Lefkovich, he's sticking with us. Chief U.S. Equity Strategist at Citi, as we count you down to the close of trading. 14 minutes to go, I should say.
Oh, nice. They cut that awkwardly. Okay, yeah. So anyway, 14 minutes to the close and 24 minutes away from Tesla earnings. Let's get ready. And look at the sticks. So what do we got? We had a little bit of a weird 12:30 sell-off about 16 minutes ago in a lot of stocks. A lot of stocks pulled down at 12:30 for a few minutes. We suspect that the good old trading algos are being funny and fussy and, you know, doing what it is that that they do. So what do we got here? We have, let's see, Mind Medicine, 12 or up 34%, but also a candle sticking down here at the same time. Looking at the watch list here, Naked still 26%. That looks like it's, yeah, okay, still moving strong here, 26%. BNGO ticked up a little bit. Yep, certainly did. OCGN sitting right around that 20%, bobbing around. ZOM, it looks like we got record close on all the indices they got here on CNBC.
Moments of the trading day, as always. And today we've got Ritholtz Wealth
minus Dow
of Research, Michael Batnick, back.
Yeah, S&P, NASDAQ, and Russell. Let's get back here to the sticks. So AMC, 12%, not as high as what we saw earlier. Kind of looks like we got sort of the trader unwind happening right here. A lot of day trading happening here and a lot of unwinding at the moment. CCIV, though, look at that. CCIV still pushing. Pretty incredible. We still got a little bit of a push here. Let's see, what else do we have here? Let's see, 1 sec. Okay, yep, here we go. So Luminar, 15%. GameStop, 13%. AMC, 12%. Open Door. Another Chamath SPAC coming back. Nice 10% bump today. Also, wanted to mention one of my favorites. It's a stock that I invest in. It's Lemonade. Lemonade's up 4% today. But not only is Lemonade up 4% today, but they will give you some awesome quotes for insurance if you go to metkevin.com/lemonade, because they are an official partner of the channel now. So check out Lemonade by going to metkevin.com/lemonade. They have life insurance, homeowners insurance, renters insurance, and pet insurance. At the very least, I encourage you to check out their website and their platform. It might encourage you to investigate the stock a little bit. And I just want to be transparent. I own the stock and I'm sponsored. So, take it with a grain of salt, okay? Because I'm just some dude on YouTube. I want to be transparent about that. But I do like Lemonade. So, anyway, what else we got? Man on a horse in virtual land collecting tax. Oh my gosh. We need, you know what? You know what we need is we need a virtual insurance from Lemonade for all this virtual real estate we got. We should try that. Go to metkevin.com/lemonade. See if they could get some virtual insurance. That's nuts. Nuts. All right, let's see here. Let's go on to Tesla. All right. Okay, so Tesla, oh yeah, Tesla's really dropping into the close here. Look at that. It's giving up that 2% we had on Tesla. We had a nice 2% gain on Tesla at one point in the day. We are now only up 0.7% at the moment, so we are seeing a little bit of a trend down on Tesla as we go into the close here, probably because we're seeing a lot of anxiety going into the closing here. Microvision's holding strong, though. I will say, Microvision's holding really, really strong here. Really impressive. Mind Medicine, also a little bit of a red candlestick here, but it's still up, over 30%. Really doing very well. Churchill Capital is really what's running. Look at this run on CCIV. And I mean, it's a lot of this is on this Apple CCIV rumor. I don't buy it as much. I think maybe Peter Rawlinson's begging Apple. But I don't know. What's this? Speaking of Apple new investment plan.
A lot of political heat in Washington from both sides of the aisle, whether you think that's fair or not. It's certainly a trend that's continuing. And Apple now.
Does my course cover virtual real estate? Hey, you'll learn how to negotiate virtual real estate.
Well-paying, high-quality jobs. That could certainly help win over some friends.
Josh Lipton. Josh, thank you. Michael, all in all, looks like Apple says it plans to spend more than $430 billion on not just this, but data suppliers, R&D. Is this what you want to see from Apple?
Yeah, I mean, Apple has become so many things. It's hard to tell what moves the needle, but obviously they're taking this in the right direction. I think they report tomorrow along with many other stocks. So we'll see what happens. We'll see what they say.
All right, let's hit shares of Spotify. They are climbing today after the company reportedly emailed its users that it plans to increase the price of many of its subscription plans across the UK and Europe. Spotify will also hike the price of its family plan in the US by $1 to $15.99 per month. The change is set to take effect this Friday. Mike, looks like the market likes it. See some pricing power here for Spotify, up 5%, and has been a very strong stock.
Yeah, it's pretty much the game plan. It's been laid out not just by Netflix beforehand, but by cable before that. Make the service indispensable. Make switching costs, perceived to be pretty high. And if you're raising it by $1, if churn doesn't go up by 7 percentage points, then I think you're in the good in terms of being net additive down the road. So I do think it makes sense. Right now, consumers are getting very conditioned to being latched into to subscription. So I think it's basically part of the story that people have been expecting. It's still been a super expensive stock. People have been owning it because it's just such a big player in a massive market, not because they've been able to really shoot the lights out financially.
Plus, Daniel Ek needs just a little bit more revenue as well in order
so you can buy your team
to buy Arsenal, exactly as
which apparently he's serious about, right?
Again, according to reports, but he did tweet about it. So I mean, it's not like he's.
Price hike on Spotify probably means we're going to see a price hike on YouTube Premium. I have to say, YouTube Premium is kind of cool because I podcast stuff on YouTube because I just play it and put it in my pocket. I'm not trying to pitch YouTube Premium; it doesn't make a difference to me. But anyway, let's go see what else we got. Let's see. Let's go back to the sticks here for a moment. All right. So what do we have? Let's see the sticks. So CCIV is still moving here, 15.7% right now. I'm not exactly sure why we got this sudden pump here just towards the close. But going back within our lines that we've had going for a while here. All right, let's go back to watch list here. Microvision up 45%, Mind Medicine 33%, BNGO 26%, Churchill Capital. Look at that, still pushing a little bit. And you got Voyager Digital at 9.4%. That's incredible. Nice sort of recovery there. All right, what else we have here? We have Target's down a little bit. Nordstrom, it's like you got retail down a little bit today. Interesting. Retail kind of slipping into the toilet there. You even got Zoom down, though. So this is why I say that teeter-totter has sort of gone away between the the stay-at-home stocks and the recovery stocks, because you got zoomed down with Nordstrom's and Target and Walmart and Darden. Like all of these guys are down today. But then again, you've got this new cohort, the Momentum Group. And the Momentum Group is just kicking butt right now. Of course, very excited for Tesla coming out within the next 25 minutes for Tesla. What's so exciting about Tesla is not just are we going to see a profit margin improve, but look, if Tesla misses, it's another buying opportunity. Tesla goes up, I don't need to buy anymore. I'm happy with the position that I have. But we're really expecting to see Tesla at we want to see big Tesla attendees, while at the same time, Tesla has 2 of their vehicle production lines off, right? The S and X line. Now, the S and X, they don't generate tons of sales anyway, but they're making those lines so much more efficient with the consolidation of the products that they're using inside the actual cars. It's really, really going to be exciting to see just the pure margin of the 3 and the Y. There's also talk, and there have been rumors that maybe we're seeing more Tesla production, or I'm sorry, more Tesla purchases of the Y rather than the 3, which is very good, because if consumers are shifting their taste to the Y instead of the 3, it's more tendies in Tesla's pockets. Let's listen into CNBC as we get to the close here. Talk about Tesla.
Or down the road, as the competition ramps up its own zero emissions kind of vehicles.
It's a new background for Sarah.
The competition eating into market share.
Yeah, so I think Tesla a year ago was 80% of the electric vehicle market. Now they're just around 70. And to Michael's point, this stock has done so well over the long term that even the near 40% pullback that we saw a few weeks ago barely even made a dent in the long-term trend. So right now, it's sort of in no man's land, but the longer-term trend, even with such a gigantic decline, is still undoubtedly higher. And also to Michael's point, the bulls here, they're not looking at the fundamentals. I mean, they think that this thing is going to be a $2 trillion stock. So I think that the bears can bang their head against the wall for whatever we're going to see coming out, but the bulls are playing a different game.
Mike Santoli, just also wanted to mention the bounce in Bitcoin today. I mean, pretty pronounced now, a 10% gain, which obviously helps the general mood of risk appetite.
Yeah, it does, and it's coinciding with a few other little inklings of maybe some of the retail traders or people who like the high octane stuff getting a little friskier. You had GameStop and AMC up today, so it just seems as if you see these little eruptions of interest in those areas. Obviously, Bitcoin, talk about something that still has been within a pretty strong uptrend even after a nasty pullback.
I'm gonna pull back here for a moment. Huge push, by the way, on the cryptos today. Really incredible. Let's look at the sticks one more time. Just want to give a quick fair reminder that coupon code 39% off. Not only does it come with those private live streams that we do every day the market is open, or mostly we spend time directly interacting, doing Q&A, financial analysis on companies or certain stocks or real estate if you get a real estate deal. But if you want to build your wealth in any way, check those programs out. Not only the Zero to Millionaire real estate course, but the Stocks and Psychology of Money one, both great ones to start with. You want to do a YouTube channel, check that out. Sales, there's one for sales agents, that is. And then, of course, property management and rental renovations, guides for everything. It's phenomenal. All right, so what else do we have here? And use that coupon, to the moon is the coupon code. So Microvision is holding on to its almost 50% here. Very, very, very good push on Microvision, holding on to its gains for the day. Mind Medicine, remember, set your calendar, folks. Set your calendar for Wednesday at 11:30 a.m. Pacific time. I will be live with the CEO of Mind Medicine and Kevin O'Leary together. So that's going to be an incredible live stream. I cannot wait to do that live. Of course, members, you can already post your questions for that interview. I'll be scrubbing through those questions before to get an idea as to what everyone's looking for. So then we've got, let's see, Zom. Look at the run that we've got here. Skills up 16%. It was up like 9%, but then it got the big fat CNBC pump. Very, very nice CNBC pump. We got the Ocugen's up 20% here. Zom came back. Anything momentum today, folks, it is up. We are now 60 seconds from the close, which puts us 11 minutes away from Tesla earnings coming up. We are at Churchill Capital here at 16.2%. Big Digital, AMC, these guys up 13%. GameStop's even up 11% today. And they were down this morning. It wasn't until AMC started running that GameStop started catching up, especially with the Microvision move here. All momentum moved up. A lot of the SPACs moved up here. Charge Points up. Shift Technologies up 6, 7%, 8%. Lots of profits here. You got Coinbase, back over 300. Lemonade up 3.9%. Go to metkevin.com/lemonade. And on the losing side, though, we do still have Etsy sitting at that down 4% on the downgrade rating from an analyst. Target, Home Depot, Darden, some of the other stores down just a little under 1%. Let's get in for the bell. Here we go.
Ahead of that, up 1.2%. Energy, consumer discretionary, and materials, the best performing sector, still up about 0.5% or so. Consumer staples, the big decliner, down more than 1%, with 2 or 3 other sectors joining it in the red. The dollar has been flat today. You've seen the 10-year hover around 157 or so. Oil down slightly, gold up slightly. At the close, S&P 500 up only 0.2%. The Dow down 0.2%. The Nasdaq holding on to the best part of 1% of gains, up 0.9%.
Music.
That'll do it for Record Close. Welcome back, everyone, to Closing Bell. I'm Sarah Eisen, along with Wilfred Frost and Mike Santoli, CNBC Senior Markets Commentator. Take a look at how we finished up the day on Wall Street. Dow was lower, down 61 points, weighed down by United Healthcare. That was the biggest impact negatively for the Dow. But the S&P 500 did finish at a record high. If you look at what took us there, it was a mixture. Energy was the best performing sector. Technology had a very strong day. Amazon had the biggest positive impact on SPY, which is the ETF that tracks the S&P 500, gaining 0.2%. Remember, it broke its 4-week win streak last week. The Nasdaq also gaining, had a strong day. You saw strength in the chips, in some of the big cap tech names. We are waiting Tesla's earnings any minute now, but it finished up about almost 1% and at its own record close. So a double record, S&P and Nasdaq. The small caps also strong, up 1.15%. Climbing back on some of the strength that we saw in cyclicals. Financials, credit card companies, consumer finance companies all did well today. All eyes now turn to Tesla's latest quarterly results, set to be released momentarily. We've got instant analysis and reaction to this closely watched report. First up, though, let's talk about this record close. Michael Batnick from Ritholtz Wealth Management still with us. Courtney Dominguez from Payne.
So I want to give you the current street estimates, okay, folks? We're going to write these down. We're going to write this down together. How are we going to write this down? I know what we're going to do. We're going to write this down on a little sheet over here. So what do we got in terms of estimates? So let's see here. We'll write it on the Q4 slide deck and estimate for Q1 2021. So what we're going to do is we're going to write down exactly what the current Wall Street estimates are. We've got about 8 minutes to go for Tesla earnings. So we are expecting an adjusted EPS, earnings per share, of 80.4 cents. We are expecting, or Wall Street is expecting and looking for, revenue of $10.415 billion. We're looking for a net of $907.6 million. And we are looking for, let's see, an EBITDA, earnings before interest, taxes, depreciation, amortization, of $1.865 billion. We're also looking for an operating profit of $848,286 million. So this is Wall Street for you, okay? This is Wall Street. So what we're going to do is we're going to compare and see what this actually comes in at. Pretty exciting. We are expecting the Tesla release within the next 7 minutes. Next 7 minutes for the Tesla release. I've got everything up and ready to go. Very excited. This, by the way, is the earnings calendar here. And it really shows us that today is Tesla Day. Let's listen in to CNBC for a moment.
The market just brushes all that off, huh?
Yeah, that's not going to affect investor sentiment here. And I would say if I sounded giddier earlier, maybe that's a reflection of what's going on in the market. And I would just tell it.
Hey, look, it's a guy with a proper microphone.
It's been incredibly easy, and I can't see it not getting harder from here. So, for example, the S&P 500 has been within 5% of its all-time high for 119 straight days. Everything is working. 97% of the S&P 500 index is above its 200-day moving average, which is an all-time high going back 20 years. The median stock of the S&P 500 is just 3.6% off of its 52-week high. Everything is working. We can't even get a dip, let alone a pullback. So where's that going to come from? How's it going to manifest itself? Obviously, I have no idea. But I would just say, to Michael's point, maybe be on the lookout.
Mike, we were mentioning that some high-profile strategists at some of the investment banks are starting to get a little bit more cautious. Do you feel that is outright bearishness, or just trying to be a bit cute, a bit tactical, and they'll switch back to bullishness if we get, a 3 to 5% pullback?
It seems more the latter, Wolf. I mean, if people are essentially saying, yeah, this is still a bull market, but we think that we're at a point here where we do get a little bit of a slowing, a flattening, a more choppy period. If you look at past cycles, everything kind of matches up with that type of a potential outlook. On the other hand, it's probably a net positive when strategists are not super bullish relative to where the market is. So in other words, it's not as if you have exuberance on the sell side that is adding to what I think is a pretty over-optimistic tone.
Oh, wait, hold on. Did we just get him? I think, oh, no. Okay. I literally thought we just got him, and all they did was put up a notice that that it's getting released shortly. I'm like, wait, is that it? Nope, not yet. Woo!
We've got an earnings alert. NXP Semiconductors. Josh Lipton with the results. Josh.
Yeah, I'm actually going to pull off this. We should have another 4 minutes here for Tesla earnings. So let's do our usual quick close analysis, okay? Let's look at the sticks very, very quickly here. We will not miss anything. Okay, let's do a quick look at the sticks here. Here we go. So, okay, yeah, Tesla fake out. I know, it freaked me out. All right, so how do we end up? We ended up 47% on Microvision, Mind Medicine, 32%. Mark your calendar for Wednesday, 11:30 a.m. Pacific, because I'm going live with Kevin O'Leary and the CEO of Mind Medicine. If you're in the course, ask your questions so I can get prepared. Churchill Capital ended up 16% on the day, down about 0.6% in the afters. AMC up 13%. The momentum trade's winning massively today. I mean, absolute destruction today. Redfin up 9.5%. ChargePoint's up. Gevo's up. All these guys 8% here, 8.5% on ChargePoint. Gevo. MP Materials is up 8%. EXPI is up 7%. It's absolutely incredible. I'm gonna do a quick little pop over here because I just want to see if they do come out. It just makes me nervous. I don't want to miss them. 1 second here. Nope. Still not up. Taking a peek here again, just to make sure. Nope. The registration page is up, but I'll do that really quick. That's a no-brainer. Hold on 1 sec. Because I will be playing the earnings call today. So, but we're about 22 out for that. So we'll stand by for the earnings call. Do we have just lots of little notices? Is the press release out yet? Nope, not yet. Okay, good. All right. Oh man, I'm excited. It's gonna be exciting. Go back to the sticks here in just a moment. Oh wait, here we go. Shareholder deck is out, and the shareholder deck is out. It just came out. Just refreshed. It's out. Let's get it. Here we go. Okay. Wow. EPS came in at 93 cents. 93 cents. Huge. That's a big beat. That's over the Wall Street estimates that were revised up. That's 90 cents on Tesla. Here we go. Tesla expected to achieve 50% annual vehicle growth in deliveries. Tesla Q1 adjusted EPS at 93 cents. 93 cents instead of the estimated 80 cents. That's a beat of 13 cents on Tesla. Revenue came in just shy of expectations. Revenue coming in at 10.39 billion versus expectations of 10.41. Tiny little miss there on revenue. 10.39. We're writing this down. 10.39. Let's go ahead and we'll have this up here. So 10.39 billion on the revenue. This is the adjusted EPS. We've got, let's see, shareholder letter just came out. Okay. Let's see here. Basic EPS, so non-adjusted, came in at 46 cents. Free cash flow came in at 293. The estimate was negative 82. So they were guessing negative 82 million in free cash flow. Free cash flow actually coming in at $293 million. That's a B. Tesla on track to start production from Berlin factory in 2021. So Berlin 2021, that's big as well. 2021 for Berlin. First deliveries of new Model S should start shortly. Wow. Okay, let's get into the sheet here. Let me pull up the sheet.
Been able to find anything here within the report that says that they are giving a guidance for 2021, though that clearly could come up on the conference call, which starts 5:30 this afternoon. So there you have it, guys.
Okay, let's jump on over for a second here, and let's actually get into the slide deck here. Let's see what we got. Slight miss there on revenue. Not so great. But the definitely the push there on EPS was phenomenal. Model Y production in Shanghai continues to improve quickly. Good. Let's go through the sheet here. Let's see. Operating cash flow less CapEx, $293 in Q1. This is huge right here. Lots of money, folks. Dollars. Model Y production rate in Shanghai continues to improve quickly. I'm just reading some of the highlights as they come in on the tape here. Okay, what else do we have here? Net cash flow, net cash outflow of 1.2 billion related to Bitcoin in Q1. Net cash outflow of 1.2 billion. Okay. Debt and finance lease reduction of 1.2 billion in total, 2.2 decrease in our cash and cash equivalents in Q1. And this makes sense because this was the Bitcoin they bought in January. So of the cash they had, they put the 1.2 into Bitcoin. I understand. So profitability, we want to get to those margins right away. Model 3 was the best-selling premium sedan in the world. Production ramp of Model Y in Shanghai progressing well. Record vehicle production, that's great. We want to see the big highlights here. In Q1, we achieved our highest ever vehicle production and deliveries. This was in spite of multiple challenges, including seasonality, supply chain instability, and the transition to new Model S and X, which they still haven't begun the real production on yet. Their, let's see here, non-GAAP income, net income surpassed 1 billion for the first time. What else? While average selling price of our vehicles declined, darn it. We did want to, there was talk that there, or rumors that there might be an increase in the average selling price of vehicles in Q1, but we did see a decrease. Now, it does make sense that they went down. No Model S's and X's being sold, right? Those are the expensive cars. That does make sense. So that definitely does make sense. Let's see here. Reducing the average cost of vehicles we produce is essential. In 2017, we began production of our Model 3. Average cost per vehicle of fleet was $84K. Due to the launch of our new products and new factories and the reduced mix of the S and X, our average cost declined to sub $38K per vehicle. Okay, so this is cost. So this is average selling price. And here they're talking about the average cost. So the average cost of a vehicle. But I do think they're talking about selling price. So that's a little confusing how they worded that. But that's definitely a chunk down. So $38,000 in Q1. But 3.5 years into production, okay, without a European factory, Model 3 was the best-selling premium sedan in the world, outselling longtime industry leaders such as the 3-seaters and the E-Class Mercedes. So those are Beamer and Mercedes. I'm looking at some of the other highlights here really quick off the tape. Tesla, okay, we talked about this, talked about that. Now, this is reiterating. Automotive gross margin, 26.5%. Yeah, well, we're going to have to take out the regulatory credits, so let's figure that out. We believe Model Y will become a category leader as well. First deliveries of S and X should start shortly. Model Y production rate in Shanghai continues to improve quickly, and 2 new factories, Berlin and Texas, are making progress. There's a lot to be excited about in 2021. Okay, folks, here we go. Let's hit the numbers. Let's hit the deets. The deets. Ooh, I'm kind of scared to look. All right, here we go. Okay, so we have to do math here, folks. Don't just read this number, okay? We got to do some math. I know we don't like math, but we got to do some math. Okay, so what we're going to do is go 9,002 minus the regulatory credits of 2385. That gets us 6617. Just verify. Sorry. I'm sorry. I subtracted the wrong number. Regulatory credits is right here. It's the second line, 518. That's the number I want to subtract. Yeah, I thought my math was going crazy there. 902 minus 9002 minus 518. We are at 84. 84. So 8.4 billion in vehicle revenue minus the credits. Now I'm going to take the credits off the profit. 2385 minus 518. Okay, this is going to be fun division here, folks. 1867 was actually profit here. So 1867 into 8484 is 22%. Okay, that's a bump, folks. That's a bump. It's not as high as it could have been, but let's go back over here. Remember what we had over here. Look at what we drew here. Okay, these were the annual numbers. The 21% here for 2019, the 21% for 2020, and Q1 of 2022 actually going up 1% on margin here, not including those regulatory credits. That is an improvement in margin. Very, very good. We want to see that we are on the right trend. Very, very good. I like to see that. Total revenues. Okay, total revenues down here. This is down a little bit from Q4. Q1 is usually a weaker quarter. We did also not have those S and X's. Okay, operating margin. We'll come back to some of these things. Right now, we want to focus here. EPS 93. This was a really good beat right here. at 93 cents. Net cash, okay, we're gonna jump on the free cash flow is nice, but let's go jump on over here for a second. Let's see what else we have. We've got total revenue grew 74% year over year. I'm looking for my favorite highlights here. Sometimes they bury some exciting things in the commentary here. So total revenue grew at 74% year over year in Q1. Substantial growth in vehicles. Of course, we know that. Vehicle average selling price declined 13% as Model S and X deliveries were reduced. Not so good. We don't want to see that. We want to see ASP up, 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 which obviously we hope that once we get the Plaid editions. Think about it. We get the Plaids coming out. Whoa, hold on a second here. What's this?
Measure of profitability this year.
Whoa. There was a rumor about Tesla and Toyota working together on Tesla giving Toyota some of its self-driving tech in exchange for some manufacturing capacity. It looks like Lyft has now partnered with Toyota instead of Tesla.
This path,
is my guess.
Invested in autonomous driving. So this is them taking it another step further. And it shouldn't be that surprising because we know that the ride-sharing companies have been under a lot of pressure. Plus, well, we've seen them spend more money on driver incentives. That supply of driver shortage has really been hitting that recovery. So as they spend more there, perhaps they have to scale back some other projects. And this is sort of Lyft following.
Yeah, that's really interesting. That might put to rest, by the way, the Tesla rumor with Toyota right there. So that could put that to rest pretty quickly. Let's get back on over here. So average selling price declining 13%, not that great. I do see your comment here. Thank you for leaving that. Yes, there is it's very easy for the shorts to do this. Shorts do this regularly. What the shorts are saying is look, $293 million in free cash flow minus the regulatory credits that you got of $518 million. When you do this, it actually means you are losing money. You are net negative. Yeah, easy short attack. Fine with me. Gives me more opportunities to buy Tesla shares. At the same time, ASP declined 13%. So this is something, obviously, we're going to want to see average selling price go up again, though we do expect average selling price to increase over time. Once we get that new S and X, we got operating income improved in Q1 compared to the same period last year, $594 million, resulting in 5.7% operating profit margin. Fine. This is weird here. Looks like they changed the text here a little bit. See, this text is a little different here. Cost reductions, 101 million positive impact on, okay, these are gap comments here on Bitcoin. Model S and X changeover costs negatively impacted both gross profit as well as R&D expenses. We expected that. Quarter-end cash and cash equivalents decreased to 17.1 billion. Net cash outflow driven by 1.2 billion going into Bitcoin. That's fine. Let's go over here. So here's our production. Oh, they put it in as 0 for production, right? Because they delivered 2,020 units. So it was 2,020 units delivered, but 0 produced. Oh, there it is, 30. I'm sorry, 2,030. I was close. Okay, so those were deliveries. That's production here. We already knew those numbers. Okay, so a lot lower here. Look at this. This is a little bit of a disappointment here. But this does make sense. As much as it's a disappointment, this does make sense. We've got a very low number here in solar storage or storage deployments. That's a low number. I'm disappointed with that number. Now, keep in mind, this is very cyclical. So what that means is, as you get towards the end of the year, you have a pull forward of people wanting to get solar panels, to get solar batteries, because you get big fat tax credits. For example, I think the current tax credit is like 22 to 25%, something like that. So if you spend $10,000 on a solar system, you'd be saving somewhere around $2,200 on your taxes. And remember, that is a tax credit, not a tax deduction, which is very different. But that is coming in a little bit lower than expected, so not so exciting here. Was hoping for that to pace up a little bit more. However, it is still almost double. I mean, it's not quite double. It's up a good chunk from Q1 of 2020. If we go 445 divided by 260 here. Yeah, okay, well, that's actually they're doing the year-over-year calculation right here for a 71% increase. So that's good. It's a good move. It's not the crazy move that we saw right here, which was a beautiful double, but that's okay. So then we've got a store, mobile fleet, okay, superchargers. doesn't look like we had superstar. I mean, we had some small additions here, not a lot of additions, certainly nowhere near the additions that we had over here. No blowout like we saw at the end of last year. Really feels like the end of last year was that massive push that we saw on a lot of the Tesla electric products here. So what else do we have here? Some talk about how internal combustion engine vehicles comprise 97% of cars sold globally. A little bit, not the most enthusiastic earnings report. I have to say, a little bit disappointing. Our Q1 order rate was the strongest in our history, and we are moving as quickly as possible to add more production capacity. And of course, we have to, in fairness to Tesla, I mean, things that are bad here, but hey, look, you shut down the S and X, that average selling price going down, that's not good. However, I think Wall Street, at least temporarily, might be blind with some of these headlines. Nobody, and I have not seen this cross the terminal tickers yet. Nobody is talking about this yet right here. This 22% here being 1 percentage point up higher here than 2019 and 2020. That's a big move. Very, very, very good move. And when we get those higher margin, those higher profit S and X's in here, I would not be surprised to see that margin net of vehicle credits, not including net vehicle credits. I would not be surprised to see this bump up to 24, 25%. And then we're really going to be printing 10s on Tesla would be an expectation. Once Wall Street sees that transition here, let's look at some of the facility ramps that we've got. In Fremont, Model Y production continued to ramp successfully, is approaching full capacity. The Texas build-out continues to progress quickly, remaining on track to start production and deliveries late this year. Okay, good. So we are expecting both Tesla and expecting both Berlin and Austin gigafactories to be at production at some point this year. Recently began moving equipment to the area. Shanghai, we've got Model Y ramp progressing well. We expect that our Shanghai factory will continue to increase quarterly production output throughout the year. We recently improved our domestic supply sourcing ratio to over 90%. That means they're getting about 90% of their materials locally. Very, very good. Vehicle exports to Europe and Asia Pacific continue to progress as planned. We got Berlin. Berlin continued to move forward. Production on track for late 2020. So both Austin and Berlin on track for late 2020. Machinery for paint, stamping, castings continue to be moved to the building. Very similar here. Very similar progression here on Texas and Berlin. In the meantime, we continue to increase import volumes to Europe, moving these Chinese-produced vehicles over to Europe, which does ask the questions. People are asking, okay, why are they not selling enough in China? Why are they having to export to Europe? I'm not sure if they have to export to Europe. I think the big question is, or the big rationale might be, we want to have a market in Europe, and that's the only way to get it to Europe right now. So we'll also look at this. Future product has been listed here. Future product is in development. This is presumed to be the $25,000 vehicle. Okay. Let's see here. Okay, this year, by the way, we do believe that Fremont in the future could get to 1 million vehicles in the future, and potentially Shanghai as well. But right now, we're producing at a rate of about 1.05 million is the current production rate that we have on an annual basis here. That could help us lead to a nice big annual beat in vehicles delivered. All right, self-driving version 9. When's it going to come out? Come on, Elon, you've been delaying this like crazy, which will soon be more widely available. This is going to be something he's going to get beat up on in the earnings. Okay, looks like ARK Invest is going to be on Bloomberg at 2 p.m. So we will be covering that on Bloomberg. Bloomberg will be hosting ARK Invest at 2 p.m. So let's say, yo, Siri. Hey, Siri. Remind me in 30 minutes, ARK Invest on Bloomberg. Yeah, let's see that. All right. Moving on. So we believe the vision-only system is ultimately all that is needed for full autonomy, doubling down on the no LiDAR argument here. They're also believing now that potentially this is something that Elon's talked about as well, that radar is becoming unnecessary earlier than expected. That's actually a very bullish indication.
Added to today's reminders.
Okay. All right. That took you a very long time. This is actually very bullish on... Oh, disconnecting my audio. It's all right. I don't need to hear myself. As a result, full self-driving. Okay, so earlier than expected is a really good sign for growth in the full self-driving division, that they're getting rid of radar earlier than expected. Very, very good here. Vehicle software. While over-the-air software updates of maps and infotainment are becoming more common, firmware updates remain rare in the automotive industry. In Q1, we were able to navigate through a global supply shortage, issues in part by pivoting extremely quickly to new microcontrollers, while simultaneously developing firmware for new chips to be made by suppliers. Cool. Battery and powertrain. What else do we have here? Range of our vehicles has increased significantly over the years and will continue to increase thanks to improvements in cell chemistry. Great. What else do we have here? Let's get some more insight. Energy storage. So what happened here? So energy storage grew well year over year, mainly driven by the popularity of the Powerwall. Demand for the Powerwall continues to far exceed our production rate. As a result, we recently shifted Powerwall deliveries only to solar customers. So this means if you don't have Tesla panels, you do not get the Powerwall. Let me listen briefly here. What's Snap announces $1 billion in senior note offering. Okay, so Snapchat is now offering, it sounds like some preferred bonds here for $1 billion. I wonder if that's going to move the stock. We'll see in a minute. Okay, what else do we have here? As we increase our production rate, we may be able to make it available once again as a standalone product. Okay. All right. Energy storage deployments can vary meaningfully quarter to quarter, depending on timing of specific project milestones. It's not only that, but it's really those tax benefits. Solar deployments reached 92 megawatts in Q1, strongest quarter in 2.5 years. Solar roof deployments grew 9x compared to the same period last year. Services continue to grow. Wonderful. Honestly, so far the slide deck, I have to say, it's a little bit boring. And that's going to lead to a little bit of a softness there in the stock. Yeah, let's see. Okay, what else here? Tesla made $101 million from the sale of Bitcoin in Q1. Oh, okay. That was the segment that we saw over here. So that means maybe they took purchases or they sold off some Bitcoin. Maybe they just wanted to keep it. Yeah. See here. We're going to sale of Bitcoin. That's this line right here. Cost reductions and sale of Bitcoin, $101 million. Oh, so interesting. They paper-handed a little bit. Whose decision was that? That's all right. So what else here? We plan to grow manufacturing capacity as quickly as possible. We expect to achieve 50% average annual growth in vehicle deliveries in the future on a multi-year horizon. That's good. Now, keep in mind, we do expect to potentially double in 2021, because if we go from 500K to a million, that's a double, right? Hold on, let's listen to this for a second here.
Energy consumption is enabling. And in this case, it's an apolitical, borderless, global synthetic monetary commodity.
So we had Yassine on my channel about Bitcoin. He's now on CNBC. This is the Bitcoin analyst, or one of the Bitcoin analysts over at ARK Invest. Let's give this a moment here.
It's just a lot more transparent. And so it makes it much easier to attack. Now, with that as the backdrop, even if Bitcoin does consume energy, it doesn't necessarily mean that it's destroying the environment. So Bitcoin critics who argue Bitcoin's bad for the environment conflate energy consumption with actual carbon emissions and pollution. And so what we tried to lay out in this most recent open source model is that Bitcoin mining can actually be a net positive to the environment by accelerating the adoption of renewables. And then we lay out the specific implications that it could have for solar energy systems in particular.
Still don't quite get it. We were just showing a graphic from Bank of America,
Sure.
Merrill Lynch, which showed that not a lot of other human activities generate a higher carbon footprint per dollar. And in fact, $1 billion in Bitcoin purchases, they say, is equal to the CO2 emissions of 1.4 cars driven in 1 year, 1.2
million
cars driven in 1 year. And then we're showing some other 1.5 coal-fired.
Sarah Eisen going savage on Yassine. I love it.
For 1 year. That's
Sure,
is
so,
that wrong?
Yeah, let me first address that framing, and then we can get into the actual model and how it relates to solar energy systems. So a lot of the analysis that you're seeing here is a transaction energy cost analysis, which a lot of people reference, and in our belief is completely flawed.
I did talk to this guy. Yeah, if you type in Meet Kevin ARK Invest Crypto, you'll see my interview with him. Great interview, by the way.
With some sort of metric of look how much energy we need to consume to facilitate a single transaction. But there is no per transaction energy cost in Bitcoin, in that each individual transactions don't actually carry any energy payloads. That goes back to what the use of mining is. It's really a means to facilitate the newly issued supply and then effectively reward these.
Right here, confronting ARK on Bitcoin and crypto, the truth.
Spend has nothing to do with the number of transactions that Bitcoin can support.
But we get that. I mean, it doesn't really make a difference at what stage of the process this energy usage is necessary. The point is, it is necessary and it is huge. And from my reading of your blog and what you're saying to us now, your sort of positive case for why Bitcoin is good for the environment is reliant on all sorts of other things happening, which may well happen if Bitcoin's adopted more, such as more renewable energy usage in general in the economy as a whole. But it's not directly linked to Bitcoin's usage picking up at all. Is that a fair point in terms of your argument, your conclusion that Bitcoin's good for the environment is totally reliant on all sorts of other things happening, which could happen even if Bitcoin disappeared tomorrow?
Sure. So let's like dive right into how Bitcoin can actually accelerate renewables and how the energy consumption, again, does not necessarily equate to pollution or CO2 emissions. So when you look at kind of solar today and some of the limitations, we see that the sun shines during the day, but not at night. So the energy supply is either abundant or non-existent. And so in the case of solar, there's often a mismatch between the demand for that energy.
I just think you're completely ignoring the questions that we put to you, and you're going back to original point. I get that energy consumption doesn't necessarily lead to pollution, but what is happening at the moment is not that the only energy used for Bitcoin mining is renewable. And if that was the case, fine, but that's not what's happening. So you're pushing back to say that energy consumption isn't necessarily polluting in the environment, but it is if at the moment the mix of energy consumption includes all sorts of fossil fuels, which is the case, is it not?
So it's not actually the case. If you look at the overall energy mix of Bitcoin mining, while I agree that it's not by no means exclusively renewables based, there actually is a significant portion of the mix that's attributable to renewables.
What percentage?
So in hydroelectric, so 40% of Bitcoin's energy outlay actually derives from renewables, and 76% of miners are using renewables in some capacity.
Great. I mean, it's just a massive leap. This whole blog post and your argument here is a massive leap. It could well be the case one day that
God, they're ripping on them.
Is derived from clean energy, but it's simply not the case today. And I get your point that you could pick holes in when some people say it's very, very bad for the environment, but to try and claim it is good for the environment is just a massive leap that, based on what you're saying to us today, I don't think you have the points to back up.
What?
So this is by no means an exhaustive breakdown of the opportunity, but I do think that it's important to address how a lot of what we're seeing today when it comes to Bitcoin mining is misunderstood, and that the energy mix is actually trending towards renewables. And if you think about how if you were to look at this model specifically, how it could actually encourage the overall penetration and actually supply a higher percentage of the grid with no change in underlying solar energy systems as the underlying profitability of those systems, that I think is a conversation worth having and more broadly.
And I think we should also just, for transparency, Yassine, point out the fact that you, ARK Invest, is a big Bitcoin believer, holder, owns Coinbase. You publish this in conjunction with Square, which also is, Jack Dorsey is a huge Bitcoin believer and holds Bitcoin. So a lot of people do look at this and say it's pretty self-serving.
Well, certainly we're long-term believers in Bitcoin. I just think that most of the mainstream coverage on Bitcoin and specifically Bitcoin mining still fundamentally misunderstands how the mechanics work. To be quite frank, this transaction energy cost analysis, or some of the points that you're referencing about general energy consumption, still alludes to the fact that there is a misunderstanding on, one, the energy mix, and two, how that actually translates to Bitcoin as a functioning system.
Yassine, thanks so much for joining us today. We really appreciate the conversation.
Thank you very much.
Tesla shares under pressure despite a strong earnings beat. Coming up, we'll get reaction.
Ooh, my goodness, that was not cool. Golly. That I mean, I wish they had a little bit more of a I wish they could have given us some more clarity. And we're gonna go back to Tesla here in just a minute. But I wish they give us a little bit more clarity. Look, yeah, the energy usage is high now, but once we get to higher use cases or more use cases, the energy cost stays what it is. It's mostly renewable. It's going to become more renewable, and that energy cost, once we get more usage, will stay where it is, and Bitcoin can really run away as a transaction tool. Whether that's Bitcoin or Ethereum or what it may be, but specifically Bitcoin in this case, it can really run away. That has this broader adoption. I'd love to have more of a conversation around that and really ask some more deep questions about the future, because CNBC just grilled Yassine here with well, it's not good for energy today. It's bad today. Today it's not good. Today we don't like it. Today we're not happy. That's all I got out of that, is today they were not happy. They need to chill out. Come on, CNBC, just relax a little bit and let's talk about the future. Where do you see us in a year from now, Yassine? That's the conversation we should be having. We should be talking about going forward, not, man, whatever. Back to our Tesla document. By the way, ARK Invest will be on Bloomberg in 24 minutes to discuss Tesla's earnings. And do keep in mind, we are seeing currently Hydrofarm down 8.22% in the after hours, and Tesla down now 2.6%. Tesla's actually trending down here in the after hours, 2.6% down on Tesla. Churchill Capital down about 1% in the after hours. Redfin's down about 1.6%. On the upside, we do have Microvision and Mind moving. Mind Technologies, that's not MMD. Sorry, we don't have after hours on MME. Let me delete this one. So Microvision up 3.8% here in the after hours. Otherwise, things relatively sort of just stable here. Let's go back for a moment over here. Let's get back to Tesla, folks, okay? Here we go. Back to Tesla. All right, what do we got? Moving back to Tesla, we have sufficient liquidity for our product roadmap. This is going to get beat up by the short sellers. We saw that free cash flow minus regulatory credits would be negative, so they are relying currently on those credits to stay profitable. Currently building Model Y capacity at Giga Berlin and Texas to remain on track with the start of production from each location in 2021. Shanghai will continue to expand further over time. Tesla deliveries for the semi-truck will also begin in 2021. I hate to say it, some of this is a little bit old news. I'm not super jumpy uppy down here. It is Q1. Usually Q1, you don't get the best news, but this does look, this is Berlin right here. Beautiful. I imagine at some point in the future, this will be covered with a solar array. Looks like the modular block walls are up now. This is a Giga Berlin casting machine. We could see some coils of what look like a EMT or the MC cable conduit there potentially, since it's rolled up for electrical work. Yeah, looks like you've got a lot of the machinery getting installed right now already in Berlin. Very, very exciting to see that. This is Gigafactory Texas. Golly, this is incredible progress at Giga Texas, honestly. This is absolutely phenomenal. Very, very cool here. Great production. You got the machinery getting moved in over here. Other parts of the factory lines. This is Giga Shanghai. With expansions continuing over here on the right. You could see that. Giga Shanghai here. Got the semi-truck prototype testing. Cool. Feel like you've been prototype testing for a while, but then again, so has Lucid. All right, let's see if we can get a couple more details here. Especially, I want to see, can we see some more about Bitcoin maybe? What else can we learn over here? So automotive sales, as we expected, energy generation and storage. So dollars coming from energy generation and storage would be here. There we go. 494 million in revenue from energy. That's actually not bad. So hold on a second. That's actually good. because we had a 71% growth. 71% growth in energy, watts deployed, megawatts deployed from Q1 to Q1 year over year. But we've actually, let's see here. Can we multiply? Wait, hold on a sec. 71%. No, never mind. It's not as great. 494 divided by, that's less than 71%. Never mind. We only had so we had a 68% growth. So this is a 68% growth year over year in energy revenue. Obviously, the auto sales smashing. I want to look at the margin on energy. This is something that I went in saying we wanted more details on, was margin on energy. So let's pull that. We're going to grab we'll grab a green highlighter here. Energy generation. So we're going to go to this line item. That's $595 in expenses. Still negative. Still losing money on energy generation by about $100 million in the hole on energy generation. Not so good. Tesla presently down about 3%. Tesla's continuing to kind of trend downwards a little bit. So not so great. Services and other services are usually a money loser, and they continue to be a money loser. So no surprise on the services. Services are losing money. The profits really coming from the vehicles right now. R&D expense, look at this, folks, more than double what we had in R&D expenditures for Q1 2022, $666 million in R&D expense. That is an increase from Q4, an increase from Q4 of 27.5% increase in R&D expense. That's pretty incredible for a quarter-to-quarter move right here. And then annual, we've got over 100% on the annual basis here. That's over 100% on R&D. So very good. Good to see here. SG&A is also trickling up here. SG&A currently I like doing SG&A as a percentage of total revenues. So we're at 1056 divided by total revs 10,389, puts us at about 10.1% for SG&A. That's about typical, down from 15% in the past. So this is good. 10% over here. We want to see them become more efficient, need less selling and general and administrative costs. Remember, they don't have advertising, which is phenomenal. Restructuring, so there's some one-time expenses here, no big deal. Some interest expenses, provision for income taxes. Okay, no biggie here. And we do have the diluted, let's see here, diluted EPS, so not the adjusted EPS, but the diluted EPS coming in at 39 cents. The adjusted coming in higher than expected at 93 cents versus the 80 expected. Okay, so some other interesting fun things. What can we see here? Current cash on hand. So we have less cash on hand right now. Part of that makes sense because we did have a Bitcoin acquisition over here. So you see cash on hand going from $19.3 billion to $17.41. I know these numbers are super tiny, and I'm sorry about that. I'll zoom in just one moment. Solar energy. So these are assets. Okay, not so excited about the assets. One thing I do like to look at for assets are current assets at $24 billion, exceeding current liabilities substantially, which they do. We have current assets here at $24.7 billion, with current liabilities at about $14.8 billion. Keep in mind, I do also teach fundamental analysis the way I like to do it in the Stocks and Psychology Money group. So use that 39% off coupon code link down below. You can bundle up with other programs if you want, or bundle them later if you want. But use that coupon code expiring on Cinco de Mayo, May 5. What else do we have here? Long-term liabilities, $28 billion in long terms. We have vehicle, energy product financing. Okay. Days. Okay, let's see. Days, sales. Okay, that's fine. Let's go to the cash flow statement. Want to see if there's anything here, particularly on Bitcoin. Not seeing anything here on Bitcoin. The 464 of net income, net cash here in operating activities. Okay, we're going to go fast forward a little bit more here. Net income attributable to stockholders. Here's that 93%, or I'm sorry, 93 cents non-GAAP, and then that 39 cents GAAP EPS. So nothing new here. Automotive margin. Hey, look at this. Folks, they do the math for us. I don't know if they've always done this. Maybe they have. On page 27, look at this. Look how juicy this is. This was literally the math that we were doing, and we did this for 2019, it was 21%. And 2020 it was 21%, and we got to 22% in 2021 Q1 here. Automotive gross margin excluding regulatory credits. That is a very, very important number right here. Elon Musk believes this can move up to potentially 30% in time. As you can see, their math matches ours at 22.5%. With these are the quarterly here, so it's not annual, but these are the quarterly. This averaged out to about 21%. In last year. So nice trend upwards in margin, not as much as we would like, but again, we don't have our high margin vehicles, so this could potentially be the worst earnings report of this year. And I'm guessing that right now, worst earnings report of the year. My face is blocking it. I apologize. Thank you for saying that. There you go. So here you could see that they broke out the numbers for us. But yeah, my guess this is probably the least exciting quarterly report of the year. We are about 15 minutes away right now from from Bloomberg having ARK Invest on to discuss these earnings. I want to listen to this for just a moment here. What is this?
Next on Closing Bell.
Major alt meets slowdown. That I want to hear about. We'll circle back to that in a moment. But let's continue here. Let's just wrap up the Tesla sheets here. I have to say, that's it, actually. Not so terribly exciting. I will have to do a little bit more digging into the actual, obviously we're going to have this is just the slide deck. We're going to have the actual 10Q coming out soon. I don't see the SEC filing on their website yet. Maybe it's already out at the SEC. Which I can do a quick search for. But yeah, overall, not the most exciting. If anything, some of the headline numbers, especially the average selling price going down, again, missing the SNX, totally makes sense. It's like getting a 0 on a paper. Your average in the class goes down really fast. Not so good, Tesla, but then again, understandable because of the issues of shutting down the SNX line, which is really just an investment into the future. SEC is not showing the 10Q yet, so we do not have the quarterly report just yet. We're still on standby for the quarterly report, so we do just have the actual earnings doc here, which we just fully went through. We are, I want to sell land in Azeroth. Who heard that they're re-releasing Burning Crusade? I'm jumping up and down for that. But anyway, yeah, okay. A little bit of a disappointment for the Tesla earnings report. Let's go ahead and look at the after hours here. And then we'll listen into some of the interviews. We do want to quickly just take a very quick peek here at, let's see here. Quick peek on Bloomberg. Nope, they're not having a conversation yet on Bloomberg. Okay, no worries. So let's jump back into what we got in the after hours here. So Tesla at 2.55%. We've got, that's a negative. So that brings us down to 719 here. Does not bring us down to the potential of dropping under 600 here. Numbers obviously still strong enough to keep it up. But look at what's running in the after hours here. Holy smokes. We got Microvision, not only 4.5%, but GameStop running again. Look at that. Woo! Wow, wow, wee, wah. 8% on GameStop in the after hours. Somebody else here has mentioned ChargePoint's up about, Enphase is up about a third here. Somebody's mentioning ChargePoint. What's up with ChargePoint? No, I don't really see that movement on ChargePoint. Let's listen into CNBC just for a moment here. Let's give them a little, see what they're talking about.
Overall sales in both alt meat and alt dairy have grown over the last few years. The rate of volume of sales growth in fresh and fully cooked plant-based meat alternatives have taken a steady dip in recent months, according to...
I've noticed that on the website analytics. I've been talking about that. It's crazy.
As the pandemic provided an early boost with more people loading up on groceries and opting to try new things. In-restaurant sales, of course, also took a hit as more people were dining at home. But both Beyond and Impossible are expanding into more grocery stores and also lowering their prices, which is steepening the competition between the two. Beyond, of course, is still the category leader. Its stock has increased by about 20% over the last year, as Impossible is reportedly gearing up for its own IPO later this year. Beyond also has a partnership with McDonald's and Yum Brands, something it announced last quarter, also something that analysts at BTIG expect to bear fruit not this year in 2021, but in 2022. Wilf, back over to you.
Okay, Rogers, thanks so much for that. Up next, Google parent Alphabet set to report results tomorrow. Tech giant coming under scrutiny from regulators.
Yeah, tomorrow. Wow. Okay, so we do have, here's just what's on deck, just so you know what's on deck. In 11 minutes, ARK Invest will be discussing the Tesla earnings figures. We do obviously expect bullishness. I am curious to hear their analysis, though. I do expect a lot of conversation about, hey, look, the SNX was offline, so of course average selling price is going to be down for the or for Tesla overall. I really hope they talk about the improvement in margin. Come on, the improvement in margin excluding regulatory credits. Give them some credit for improving margin while not having your high margin vehicles. Can we talk more about how impressive that is? Really, really impressive. They could have easily had a pass there. Folks, after the CNBC airing, take a look at that red candlestick there on TTCF. Boop. A little bloop right away after CNBC just smacked them basically here. Let's go to Beyond Meat. I tell you, I watch the analytics for these websites, and the website analytics are down on these frozen meat providers. And just the frozen food providers in general. Store sales still very strong though at TTCF. In fairness, Target is doing very well selling this product. Although they did just introduce the product too, so you have to wonder how many people are sampling the product the first time they see it in the store. Let's give this a shot. And so the big question is going to be, how long are people going to be coming back? All right. What else here? We've got Microvision. Golly, yes, let's go. The Microvision. It's gonna hit $30. I am so happy. That is so exciting. $28. And we're getting back to $200 on GME, folks. Let's go. Let's go take a peek at while we wait for some of these interviews coming up, and of course the earnings call. So what do we got over here? We got Bitcoin at 53.3. Bitcoin actually selling off a little bit after that slam on CNBC. It's actually incredible to see the power that CNBC has here. I think CNBC took a very, very short-term stake here at works so hard he gets less bathroom breaks than Amazon employees. Oh my gosh. I worry that's a slam at Amazon. Okay, so let's look at Doge. But yeah, definitely a little bit of a rough CNBC right there. What do we got here? 26.8%. Remember, Mind Medicine, if you're just now joining, Mind Medicine will be on my channel at 11:30 a.m. Pacific time on Wednesday with Kevin O'Leary. We are going to do a joint interview. It's going to be really fun. Not quite sure how that's going to work, but we'll figure it out. I'm worried there's going to be a lot of talking over each other, but it'll be fun. So I'll really have to take control. So Doge, my channel. Doge, let's do Ether really quick. Let's do, and then I do want to see what they're saying here on Tesla. Yeah, Ether selling down a little bit here as well off the highs of the 25.30 that we've seen here. Let's take a peek over here.
2.4. And we've got a news alert on GameStop announcing that it has completed its previously announced share offering program, selling 3.5 million shares for gross proceeds of approximately $551 million. That's the maximum number of shares the company was offering in this round. They've been taken and moving higher after hours off the back of that sort of confirmation, really.
Yeah, 9%. After the break, your Wall Street look ahead. Investors gearing up for the next big FANG.
Is this true? Somebody says Kathy's going on CNBC. Is that true? If you know that, let me know. Let's see here. Oh, Leary, Kevin, did you sell that damn Tesla stock? Yeah. Nope. All right. You said Wednesday. It is Wednesday. Biden talks in the evening. Biden has a prime time address in the evening. Okay. Yeah, Wednesday's going to be a crazy day. All right. So GameStop still running here, 9% in the afters. Microvision at 6.7%. Mind Medicine also up in the after hour. No, sorry. This is my technology. Get out of here. MMED. Although it's going to be confused. Wait. Mind Medicine. That's the one we want. Yeah, Mind Medicine doesn't report in the after hours because it's OTC, though. That's about to change. All right, let's see what Bloomberg's got going on. So who's Bloomberg talking about? Let's see.
ECB and the next gen EU funds having disbursement issues on technical hiccups. And then we also had the China credit impulse rolling over, bad bank news, and we also had a pretty significant tech underperformance on the back of regulatory concerns. So it was a very divergent kind of first quarter. But one of the things that, has kind of stood out to me in that light is that despite all of that, looking at the dollar, euros it's still at 120-ish, and dollar China is below 650. So I think the market is starting to discount a much more.
Okay, let's pull off this and go to, as the comments here say, border wall channel.
Is tax our hardworking Americans. We understand that. We're behind Senator Capito's plan.
Wow. Great stuff, Senators.
I wish you luck on the infrastructure plan. Sure. Okay, so we're going to have like a little 4-minute lull, I feel like, here as we wait for the interview with ARK Invest is going to be on, here we go, Tasha Keeney. I probably butchered her name. Sorry, Tasha. Tasha from ARK Invest is going to be on actually at in 10 minutes at 5 after the hour on Bloomberg to discuss Tesla. And then we will be we'll be ready for the earnings call at 2:30. So 2:30 for the earnings call. It'll be fun. Well, I don't know. But then again, I don't know how fun an earnings call can be. But we're gonna hang out together. I'm ready. I brought a bottle. Lauren's Evian here. She gets mad when I take it. I just tell her to buy more. You're in charge of that stuff. But she's like, I bought these for me. I got you Topo Chico. I go, I know. That is true. All right. Let's see. What else do we have here? Let's go. You know what? We should look at GameStop. Still 7.7% here. Let's go look at the 10-year Treasury yield. Let's take a peek at this. So we're going to hop on over here to... yeah. Okay. Yeah. Oh, the 8K just came out on Tesla. That's the current report, actually. So current report versus a quarterly report. Really? Well, we'll pull this for a sec. Let's see what we got. Okay. In the meantime, yeah. Okay. Okay. No, this is just. This is not the. What do we have here? This is just first quarter update. I think this is just them 8K'ing the investor presentation. That's my guess. Okay, let's go ahead and get out to the 10-year. Alphabet reports after the bell tomorrow. All right. Oh, I didn't even have the right screen up. All right, what do we got here? What do we got? 10-year Treasury at 1.568. Slight smidgen up here. Not as high as it was this morning. Slight smidgen up. So kind of bobbing around here really throughout most of the day. So a little bit boring on Treasury yields. Pretty flat again. How's Tesla? Somebody's saying Tesla's trying to recover in the after hours. Let's take a peek at that. We are, it's still at 2%. We are 8 minutes away from the ARK interview on Bloomberg for Tesla and about 30 minutes away from our earnings call with Tesla. All right, so what else do we have here? Tesla, 2.06% in the negative. So we are at about 222, not as low as that 215 that we hit. We did hit a low 215 in the afters on Tesla. Redfin following down here about 1.5%. Xpeng's down about 0.8%. Dave & Buster's down a bit. Tattooed Chef down a bit there. Some red candles after CNBC had to slam the freezer aisle. GameStop, Microvision. These GameStop can't stop, won't stop. That's what we got over here. All right. Let's listen to CNBC for a moment.
In terms of leadership, it's as evidence of an indecisive tape at the moment. We knew earnings were going to be great. We knew GDP is going to be roaring, and it's all happening. And the market's kind of digesting it well and obviously holding together, but not taking each incremental kind of bit of good news as an excuse to catalyze higher, at least not yet.
We did close at a record high for the S&P and for the NASDAQ. It's sort of been this quiet march higher without any major catalyst. You know, it's not moving on vaccine news or right. Anything like we used to see. Right. Mike, what breaks that quiet?
It's just the backdrop, right? I mean, maybe it's going to take something on the yield front for them to maybe reassert the increase in Treasury yields that has really taken a break. Oh, you obviously have a Fed meeting this week.
We had a week auction this morning, too.
What's that?
Yeah,
week two-year auction. Yeah, absolutely. So there could be some movement along that front. And, you know, we're going to get through here. We're going to get a GDP report. It's difficult to say. I mean, we've had a little bit of an air pocket near the end of each month this year, but that's such a well-examined phenomenon right now. I'm not sure that would come as a surprise to anybody. I still think it's a mix of relatively comfortable positioning and attitudes towards stocks. Investors are pretty much buying into the bull market theory, combined with a tape that's been, pretty tough to buckle. So therefore, don't fight it at this point. But it seems like, if you tell everybody the fundamentals are great, it's not coming as news necessarily to the average investor.
And a little bit of a pickup in the VIX, but again, same with yields, steady, nothing to worry about.
Not yet. Certainly at these levels, there's a little bit of an increase in correlations among different stocks that sometimes bumps the VIX higher. But no, I don't think any of the signals say that we have to be raising alarms just yet.
That does it for us today on Closing Bell. Thanks so much for watching. Fast Money starts.
I'm Melissa Lee, and this is Fast Money. Tonight's trader lineup: Guy Adami, Dan Nathan, Karen Feinerman, and Delano Saporu, founder of New Street Advisors. Tonight on Fast, we're all over the after-hours action shares of Tesla and NXPI. Both stocks on the move on earnings. We're breaking down their quarters straight ahead. Plus, time is ticking on a correction. That's the warning tonight from Morgan Stanley's Mike Wilson, why he's calling for a big pullback and when he sees it happening. And later,
ooh, another market crasher. All right, so let's just do a little while we wait here. We got about 5 minutes here for Bloomberg to be interviewing ARK. Let's do another little, just a brief kind of overview of some of the big things that stood out here on the Tesla doc here. So we know that the average selling prices fell substantially in Q1. And this was their explanation here, right? As our costs decreased even faster, our auto gross margin increased, right? This is them trying to soften the blow here. This is very true, though. The auto gross margin did very well with less expensive vehicles, more margin. That's very, very good at Tesla. However, because out their average, across fleet selling price, or taking out the S and X, their average fleet selling price is down substantially, or average cost of their vehicles is down substantially to $38,000 without the S and X, down about 13%. This 84,000 here, this is a reference to back in the 2017 days, which is kind of what you're going to see a little bit with Lucid. When Lucid first comes out, you're going to see this high initial average selling price, and that'll go down over time. So we'll definitely see that. What are some of the? So this is this to me, I would agree with the commentator here, Jeremy Wyrick. I agree with you. This average selling price, you can't really count it this quarter because you shut down two vehicles. And it's the refresh. So you expect there to be a lot of enthusiasm for these vehicles to potentially buy more or see potentially sales of these vehicles go up over time. Did one-time changes factor into that margin improvement? Elon compensation bonus fund? So generally compensation, I don't see in vehicular margin. Compensation is usually accounted for separately, but that's a very good question. We could always dive into that. What I would say is the retooling would fall into this. So that would be my assumption, is that in automotive gross margin, you would see retooling expenses go into this unless they're burying some of them in R&D. Once we get the actual quarterly release, we'll know a lot more because then we'll actually be able to go into the footnotes of how this automotive gross margin was put together. Where did those expenses on the retooling and sort of the streamlining of the factory, of the facility for the vehicle production of the S and X, that streamlining, where did those costs end up? But yeah, the fact that automotive margin increased despite that is a very, very good sign. So we'll see how that evolves. So that was exciting for me. That's a big takeaway for me. So average selling price, not a concern. Big excitement over the jump in the trend up on margin. Very, very good. We had a not so wonderful increase in superchargers deployed or even megawatts. Let's see here. Okay, makes sense though. You do have a typical slow Q1, so not a terrible surprise here. Overall, a little bit boring. Updates that they still plan to release Autopilot soon, version 9.0 soon. Giga Texas, Giga Berlin on schedule, semi on schedule. Kind of lacking news. Let's listen to ARK analysis, ARK's take on this in just a moment here on Bloomberg.
Nicely to just dive a little bit deeper into Tesla's first quarter earnings, bringing in, of course, now Tasha Keeney. You know her of ARK Invest, Tesla, top holding in the firm's ARK fund. And you caught everyone's attention, Tasha, of course, a little bit earlier in the year with your view on where Tesla's price target will go to 3,000 as your general case by 2025. What did you hear today that excited you?
Well, I'm most excited about Tesla's opportunity in autonomous driving. And what we saw in this most recent release is that, they do plan on releasing the FSD full self-driving beta version of their city streets autonomy software to more customers soon.
But they didn't give us a date.
Tesla also mentioned that they're realizing that with their new vision system, that radar is becoming unnecessary sooner than expected. So I think, this has been a long time coming. Tesla has the largest deployment of robots in the world. If you think of each car as a robot collecting information. And I think now as we're seeing autonomous vehicles commercialized for the first time, Waymo was first commercialized in the US. I think Tesla is a real player to watch here with their scale and data advantage.
She ain't happy either.
Is it bullish or not when you hear then of like a Lyft getting out of that and selling on to Toyota?
I wasn't too surprised to hear that. We've seen a lot of shuffling in the space. Most recently, GM also acquired a company called Voyage, and they had acted as if they were close to commercializing, and an acquisition would seem to say that maybe they're not so close if they have to integrate new technology and a whole new team into their team. I think this is a really tough problem to solve. And I don't think every company is going to be successful. In fact, we think the auto industry is going to consolidate significantly over the next decade as we see the shift to both autonomy and electric vehicles. So I think you'll continue to see more shakeups and really whoever launches and gets to scale soon will have an advantage in this space.
Of course, there are plenty of other reasons as the thesis of the valuation and the view that you think it's going to get to an annual revenue of $700 billion. There's its capital efficiency, its insurance business. Where, therefore, do you think its capital efficiency is going at the moment? What did you make of, how its cash placement is, what it's doing with Bitcoin, how it's driving, down the costs of making each car?
Yes, we've done a lot of work on this space. So my partner analyst, Sam Forrest, has modeled the cost decline of electric vehicle batteries using Wright's Law. And so Wright's Law says that for every cumulative doubling in production, you get a corresponding reduction in demand. If you use Wright's Law to model Tesla's cost decline, you'll see that, as we saw them announce at Battery Day with the $25,000 car they expect to produce over the next few years, that electric vehicles are really reaching price parity with gas-powered cars. And that's going to cause a very important inflection in demand. So the total cost of ownership of an EV is already lower than a gas-powered car, but now the sticker price is going to be lower, and that's really what consumers look to. So we think electric vehicles are the future, and we're really just in the early innings of this. Tesla in their release pointed out that 97% of cars out there today, gas-powered cars, and actually 98% of their trade-ins are gas-powered cars as well. On the capital efficiency side, one thing that we changed in our most recent price target is we actually think that they could be more capital efficient than we were previously giving them credit for. And that's as we've seen them build out production in Shanghai and sort of across the globe, we've seen that they actually can lower that cost per car a little bit more than we had initially anticipated. But again, that larger story is really that long-term cost decline curve with electric vehicles that we've done some work on.
Yeah, certainly they've been talking plenty about the cost. The average cost per vehicle across its model line was $84,000 back in 2017, and now it's only $38,000. So we see that movement. I'm interested in the overall competitive landscape, though, because you say this is like sort of a seismic shift we're seeing in the whole view on electric vehicles. Is there a worry, though, that with GM, with Volkswagen, they too can drive down the cost of electric vehicles, and we're basically at peak market share for the likes of Tesla?
Yes, actually, and that's an important part of our thesis, that we think that other players will enter the market with competitive electric vehicles. In our model, we don't expect Tesla to take more than 20-some% share of each segment that they enter in the vehicle space. We expect other automakers to come in there. But what we have seen is that Tesla is still much further ahead on performance and price. If you model those two, Sam Korus, my partner analyst, has done some work looking at the charge rate versus cost. And if you look at Tesla's lineup, other automakers, may be able to match performance, but they're doing that by producing a very expensive car. Tesla's the only one who's able to produce a very high performance and relative to competitors, an expensive vehicle. So we think they're still at least 3 years ahead of the competition. But that said, we do see a lot of uptake, especially with the smaller electric vehicles in China, for instance. Electric vehicles are going to happen, across the globe. And it's not just going to be passenger cars, by the way. We think it's going to be machinery. We think we've done some work on electric semi-trucks that could actually be cost competitive to rail. Electric vehicles are really the future everywhere. And we expect many companies to participate. But again, not everyone will be successful. There will likely be some consolidation in the space.
You're, of course, a long-term holder, Tasha, to a large extent, in terms of your thesis is a longer-term perspective. But when you're seeing the share price, not moving that volatile right now, off by 1.8% in after-hours trading, in the market, the options pricing, we're seeing swings of anywhere up to 7%. But do you think the market just had anticipated all the good news and we needed more in terms of a blowout for real performance today?
That's a possibility. I would say that when you look at Tesla as a stock, you really should look to the long term. So, we take these earnings periods as time to learn more about the company. Of course, listen to the calls, get more details on things like the autopilot updates that are very exciting that they're enabling. But overall, I think, Tesla is an innovation story. So at ARK, we invest in disruptive innovation, and we have a 5-year time horizon on all of our investments. So I think when you look at disruptive innovation, things can change really quickly. You see that with exponential growth. So you really want to look at it over a longer term horizon. So I think there could be some immediate reaction to this news tonight. But I would say that we are certainly keeping in term, and we are certainly looking for the longer term picture here, that 5-year picture for both autonomy and electric vehicles.
And with a bull case of $4,000 per share and potentially $4 trillion market cap, quite phenomenal set of research. Tasha Keeney, it's great to get some time with you on a day when we have Tesla's earnings. Thank you so much.
Yeah, look, I have to say, the Bloomberg person asked, hey, what were you excited about in the earnings report? And Tasha mentioned things that were kind of old news. We already know version 9.0 is coming soon. It was supposed to come this month. Now we're thinking July. She mentioned Wright's Law. Kind of already knew that about battery costs declining. She mentioned what else did she mention? Talked about, I don't know. There was something else that was mentioned as well. The removal of radar, or the less reliance on radar. We already knew that. Now, I'm not blaming her for not mentioning something new. The point is, there was nothing new. This was boring. There was nothing new in this quarter earnings report. It's going to go down, in my opinion, as the worst earnings report in this year. It's a boring earnings report. Now we get this talk about Lyft making a deal with Toyota, which was rumored to be a Tesla deal. Not so good.
Opening trade, and it's kind of come a little too far too fast. I'm not sure they had to sell it for this. They might have been able to get a bit more if they had waited. I know the understanding about getting to that profitability just seems to be something that they needed to do, but I don't know. Future is going to be autonomy for these companies.
Yeah.
So how they get there, now they have to partner.
Right now, it makes a lot of sense. In a few years, will they wish they had been more heavily invested in this way back when? Because as Dan mentioned, Waymo could very well be the head-to-head competitor with a Lyft or an Uber, or it could be Tesla for that matter, with a fleet of robo-taxis. Delano, is this short-sighted?
Melissa, no, I would agree with Dan here. I think this is a smart move. I've actually been out of any of the ride-sharing, companies. After looking at it from a year back, it looks from IPO, it looks smart. They're down about 20%. Lyft is. But if you're looking at it from the year time frame, as Dan mentioned, the reopening trade, it's up, pretty handedly there. But I think, the biggest thing, these companies are really price sensitive, margins, profitability, the bottom line. And this is something that has to be really played to when you think about it as an investor standpoint. That's the reason why I stayed out. I think it's an area where it's super competitive, as mentioned, and that lends to possibly price wars when you're talking about getting the drivers out into the road, and just the pie is split in many different ways. That for investors, you want to really watch those numbers. And so for that reason, I've kind of been sitting on the sidelines when it came to Lyft.
All right, coming up, we're counting down to Tesla's conference call kicks off in just moments.
We're going to be on it.
What Elon Musk is saying about the quarter. But first, we've got another earnings alert for you. NXP Semi on the move after its report. We'll break down the after-hours action in that name. Plus, check out the move in shares of GameStop. The stock is rallying after market. We'll tell you why. Stay with us. Much more Fast Money in 2.
All right, we are now 14 minutes and 30 seconds away from the Tesla earnings call. Folks, this is the opportunity where maybe the stock would move. All it's going to take is Elon to say something crazy for the stock to go in either direction, which, could tend to be a little entertaining, I have to say. I think everybody enjoys listening to Elon on these earnings calls. We are definitely on standby. I did a little bit more digging into the question that came up on where that stock-based compensation expense goes, as to whether or not that applies to margin or whatever. From what I can see with the information that we have, is the stock-based compensation comes out of the cash that they have. So it comes out of their free cash flow that they have. And it doesn't actually really show up in their statement of operations. So because I'm not seeing it in here, and this makes sense. It makes sense that they wouldn't account for it in their statement of operations. And on operations, we get 39 cents of EPS down here, which they add back in for, that's for GAAP earnings, but they add that back in for non-GAAP. See right here's non-GAAP. And you see stock-based compensation is 54 cents, which is literally, if you take the EPS we see, the GAAP EPS that we saw on the sheet, add back in the stock-based compensation, you can see that 0.93. So that's where we see the stock-based compensation coming right out of cash, really, not coming out of operations. So and we'll verify this as well when the actual quarterly comes out. But it appears to me that stock-based compensation is not something. Okay. All right, Siri, you don't need to hear me. You just need to stop listening. Anyway, we're not seeing that come in or affect these margins over cents. We would not expect it to. That would give very unclear margins. It'd be very difficult to compare margins over different quarters. Very good question, though. A very good question. So again, we are now 12 minutes away from the earnings call. And we are sitting around now waiting. Okay. So we are. Some of these comments are funny. We are now standing by for the earnings call in 11 minutes and 10 seconds. Let's go see what Fox Business has to say for themselves.
The root causes are largely...
Hey, look what they're talking about.
Right, because we never saw a surge like this in 20 years. And at last check, Donald Trump wasn't president 20 years ago. He's not president now. You can't keep blaming your predecessor for every problem that you may have. And look, when she was asked, when are you going to go to Honduras or Mexico to start?
We're going to pull off this, and instead we're going to jump on over to Bitcoin talk.
You're starting to see that more on the payment side, and Square and PayPal will jump in that space. And then also there's another catalyst coming in June, a Bitcoin conference, actually, a physical conference in Miami. And you're going to have all the top people like Jack Dorsey there and all that. And I think you're going to see a lot of innovation coming around that conference and a lot of new announcements that really drive the market higher too, I think.
I'm interested in that point of actually spending your hard invested in Bitcoin, because I feel like people want to hold this asset right now, or indeed speculate on it. It's a trading asset, but are people really buying their Teslas with it? Are they really, the companies that you're speaking to, when you put in place the option to purchase things with Bitcoin, is anyone actually doing that quite yet?
Yeah, so BitPay processes over $1 billion a year, so people are spending crypto. The difference is about 4 years ago, 95% of that was coming from Bitcoin. Last week, we had our lowest Bitcoin volume ever with only 50%. So we're seeing a lot more volume coming from Dogecoin now, believe it or not. Dogecoin went live with us from the Dallas Mavericks, and Mark Cuban really is a big fan of that. And we saw over 10% of our transactions coming from Dogecoin last week. But also stablecoins is a very exciting part for payments. And that's a stablecoin where it's backed by the US dollar. And Visa and MasterCard are really promoting that in a big way. So people will use Bitcoin maybe as an investment vehicle, but then stablecoins or other currencies around payments to actually spend online versus using a credit card, which is much more riskier.
Spending the Doge. Who'd have thought it? BitPay Chief Commercial Officer Sunny Singh. Stay well. Great to have your take. We thank you. Meanwhile, of course, China is expanding its antitrust crackdown beyond China.
All right, let's pull off Bloomberg here. Let's go ahead. While we wait for the Tesla earnings call coming up very, very soon, let's take a look at the after-hours market here. We've got GameStop, folks, 14.1% in the after-hours. It is rallying more than GameStop rallied today. GameStop rallied 11.74% during the day. It is up 14.4% in the after hours. Costs up 6%. Microvision up another 4, almost 5% on Microvision. Express up, Shift up, Clever's up, Canoe's up. We got a lot of movement here in the after hours. Matterport up 0.5%. Really, really exciting. So look at the losers here. Tesla just below 2% here as we consolidate, down 2% on the day. We've got Coinbase down at 301. Tattooed Chef down to 0.601. And CCIV, even though it was up 16.16% on the day, it is down about 0.5% in the after hours. Let's go see what else is popping. Let's see. We have, what do we got? 9 minutes to the Tesla earnings call. 9 minutes to go. Let's see. NXP. I don't know about NXP. Hold on a second here. Let's go back to Bloomberg for a moment here. So keep in mind, we do have the Tesla earnings call ready to go. We are at 8 minutes left to the earnings. Let's go listen into Bloomberg. Okay, Bloomberg's on commercial as well. All right. We are on standby for the Tesla earnings call. Keep in mind as well, mark your calendar for 11:30 a.m. Pacific time on Wednesday. That's in 2 days for an interview between myself, Mind Medicine, and Kevin O'Leary. That will be a very exciting interview. Also, take advantage of that coupon code link down below for the amazing programs on building your wealth. Many people join and they're like, wow, even just this one thing I just learned paid for the programs. And then there are hundreds of wonderful things you can learn in the programs that I don't talk about online. Mostly because a lot of the perspective in there is it gets so niched down that it's that's really, really empowering and incredible. But it's not something algorithms do well with on YouTube. Anywho, we are really kicking butt right now on a momentum rally is what we have in markets right now. Momentum rally, not so much an earnings rally here. You've got Lyft even up 2.3% here on news of this autonomy sale, which came after hours. It's a big bump there in the after hours. Playboy not only up 13% on the day, but up 0.6% in the after hours. We've got, let's see. What else is moving here? 1% on Rocket. Rocket's been sitting at 22 forever. That's not a surprise here. Microvision 4.7. GameStop still kicking butt. Absolutely destroying here, especially after some weakness recently. Pinterest at 20.26%. Spirit Airlines up. Dave & Buster's up. A lot of softness or sort of, I should say, moderateness there in the middle. Let's listen to this on Countdown to Correction. Now, this looks like it's coming up probably after.
Call kicks off in minutes, as I mentioned. We'll bring you all the market.
Yeah, that's after a break. So we, of course, are going to be focused on that Tesla earnings call, which is coming up in about 6 minutes now. Let's listen into Bloomberg while we wait. Let's see what we got.
Over the initial $350 billion investment that they already pledged that they would be making beginning in 2019, which obviously was just a couple of years ago. The big question for me is how much of this is money that they would already be investing that they're simply touting to whatever benefit there is there. My sense is that most of it, these are in many cases existing suppliers they're already using to source individual components for the iPhone and other devices. At the same time, we're seeing some very significant expansions in several different offices across the country. Here in Los Angeles, they're going to be expanding their Culver City campus. San Diego is going to see a large expansion. Boston's going to see an expansion. They have an office with only a few hundred employees right now in Boulder, Colorado, which will also see an expansion. They've already said they're doing work in Detroit. They're doing an expansion in Atlanta as well, and Iowa. Basically, any different region you look at across the country, seeing an expansion here. And that's being capped off with a new.
This is, by the way, on Apple's a big sort of expansion in North Carolina.
As 3,000 employees working on AI and software. So you're seeing Apple really, move the heart of the company sort of out of Silicon Valley, out of Northern California, and spreading it around the country.
And sort of putting across the narrative that was in some way a focus on equity, really bringing Apple's money, dollars to bear, the cash they have to every single state in the United States. But it was also notable that they were sort of touting the amount of tax that they pay as well. Interesting, the narrative that we're getting in among US politicians at the moment that, well, the administration looking at raising US taxes, but also, taxing your profit abroad a bit more as well.
Yeah, in the history of Apple, they're 30, 40 years old at this point. They've never said anything or done anything by accident, right? It's no coincidence that later this week, we're going to see earnings results from the first full quarter of the 5G iPhone 12 line. And make no mistake, it's going to be probably a record-crushing number in many respects, based on them already saying they're going to be making multi-$100 million donations. They pay all this taxes. This is also a way to let the Biden administration know, just like they did with the Trump administration, hey, we're paying a ton of tax already, and this is coming as there's new antitrust scrutiny. Obviously, you're aware of the trial, the hearing they had last week with Capitol Hill, and then obviously all the other factors related to corporate tax hikes that have been discussed by the Biden administration. So there's a lot at play here, and it makes sense that they're announcing it just days before earnings, and really at the height of this tax discussion.
All right, we're going to pull back here for a second. Let's listen to this brace for a pullback right before Tesla earnings, which Tesla earnings. We do have a stream, a feed now from Tesla, but we do not have any audio yet, and that makes sense. But they are preparing. Hold on. We have the Tesla holding music. We're close.
So that kind of makes sense. Now it's gone further than I would have guessed. But we're right on that line. I mean, where it probably starts to spill over now into the quality stock. So what are we worried about? I mean, really, first one is seasonal. Seasonalities are difficult as you go into May. Everybody knows that. The second thing I would say is that we got peak rate of change on virtually everything that we follow, and we think we are kind of moving into what we call this mid-cycle transition. That's faster than normal, Melissa. Normally, it takes about 2 years for that to happen, but this recovery is happening so quickly that that's happening now. So I'll give you the years when we had a mid-cycle transition. It's 94, 04, and 2011. And all three of those years saw about a 10 to 20% correction. So that's no guarantee that that's what's going to happen, but that's what we expect. Multiples should come down. And by the way, that's what should happen at this stage of any bull market in a recovery from a recession.
That was an interesting argument. He says peak rates of change. Expecting slower or softer changes over time. Okay, from now on, let's just go ahead and jump on over and listen to Tesla. Boy, I hope that is royalty-free music. So I'm going to say not listen to Tesla for a moment until, yeah. Well, let's see what else we got here.
Opportunities to reopen the economy, but there's cost issues now. Everybody's finally figuring out that reopening an economy is more difficult than shutting it down. And a lot of the reopening stocks, quite frankly, have cost issues, supply chain issues, labor availability, and things like that. So we want to separate sort of the reflation trades, things like materials and financials and maybe some of the commodity areas. They probably hold up a little bit better, ironically, because the longer term story is quite good there. The other thing I would say is that, defensive stocks will obviously hold up better. So healthcare is an area that we prefer.
We should mix these two guys together, or the Tesla music, mix the Tesla music and this guy, and it actually is more entertaining.
Tweet this morning saying that many of the forecasters he watches thinks that we're at a peak economy, and therefore, if that's the case, then Jay Powell would be right to keep rates lower and keep his foot on the pedal. What do you make of that, and how do you think the Fed plays into this call that you have?
Yeah, I'm not really anticipating anything from the Fed that's different than what they've been saying. I suspect they're going to be very dovish at this meeting. They're going to continue to put their foot on the pedal, as you say. I think that's their job right now, is to make sure that we get to the other side of the virus and people are vaccinated and we can actually reopen. They're going to wait to see the whites of the eyes of that recovery. So I don't think the Fed is really part of this particular correction if we're going to get one. However, the peak rate of change is going to play into the market's anticipation that the Fed's next move will be a tightening. I think it's hard to argue they're going to do more. So whether that's in June or in Jackson Hole, they start talking about tapering or what their plan is to kind of exit this extraordinary monetary policy, that is probably sometime in the next 6 months. And the market, being a discounting machine, will start to think about it. But I don't anticipate the Fed doing anything proactive in that regard.
Hey, Mike, it's Karen. So I read your notes and you talk about equity risk premium contraction sort of being at probably the bottom. Even if the Fed keeps their position. All
right, we're going to pull off CNBC here because we are...
Pardon me, this is the operator. Today's conference is scheduled to begin shortly. Please continue to stand by, and thank you for your patience.
What? What? They're not ready yet? What is this crap? Come on, Tesla. Get your act together. Still waiting on Tesla. Okay.
Really have not rebounded. A lot of those stocks are still down 20 or 30% because they were just too expensive for where rates are now. I do think the next adjustment will come through the equity risk premium channel as opposed to the rate side, because look, equity risk premium at 280, 285 is too low, given this reopening risk that we see, the Fed's next move being somewhat of a tightening, and something we haven't even talked about yet is taxes, and some of these maybe less friendly things that are going to happen next year.
All right, Mike, we're going to leave it there. Thanks so much. Mike Wilson of Morgan Stanley. Karen, just to follow up on the question you asked, Mike, how are you starting to think about valuations?
Nervous, pretty nervous. I mean, I want to own protection here with the VIX, lower. I don't like to sell what I own, but I do need more protection. I feel like...
Momentarily. Thank you for your patience, and please continue to stand by.
Come on, Tesla. What is this?
Go higher anyway, no matter what the Fed does. I also think about the Fed being dovish, Guy, which could actually mean inflation gets hotter, and that's bad for the markets, particularly when the markets are starting to factor in a tapering of the Fed's bond purchasing program before the end of the year, or at least telegraphing of that. How do you put all this together?
Well, I've been trying to put that together for quite some time, and every time I sort of connect those dots, it leads me to believe we're going to have the scenario that Mike Wilson just talked about, and it's been the incorrect one. But I'll say this in terms of what Mike pointed out. It's very similar to what Savita from Bank of America pointed out a week and a half or 2 weeks ago. I'm not saying, I'm just saying the thought process is very similar. And oh, by the way, Tony Dwyer, who came out, I think, last week, said similar things as well. So you have some very well-heeled analysts making similar comments as to what they're seeing out there. Again, none of them said they can time this thing. Clearly, I haven't been able to, but the warning signs are absolutely there.
We've got Tony Dwyer joining us tomorrow, actually, so we'll check in with him on his call. Speak of the devil. Delano, how are you feeling? Because now that more strategists are...
Okay, we're going to pull off here. Come on. You're boring me. Just music. GameStop settling down a little bit here while we wait for Tesla's earnings call. We will obviously be watching Tesla in the after hours. We last left it off down 1.9%. Hey, recovering. It's recovering as the suits finally understand that this is okay. We just got to get through the first quarter. It's all going to be okay.
Ladies and gentlemen, thank you for standing by. Your conference call will begin momentarily. Thank you for your patience, and please continue to stand by.
What? Still? More delays? What is this crap? This crap, that's what this is. It's funny. I just saw CNBC put up a banner, Tesla earnings call underway, and it was up for like half a second, and then they put something else over, some other like CNBC market alert, and then they started talking about something else because it's not underway. Oh, come on. We ain't got time for this. I scheduled to be out of here at a certain time. I can't live stream all day while you folks wait on this earnings call to start. Not happy. We'll wait, it'll come. Tesla now dipping on the delay. Look at that. See Elon Musk, you see this? Attendees are evaporating because of this delay. Well, look at that. Look at this. They're red candlesticking the stock because of the delay. FSD's delayed. The earnings call's delayed. Exactly. Everything's getting delayed. Everything's delayed. Model S and X, oh, it'll be back up in Q1. Nope, delayed. Oh, we'll have the button to download full self-driving in April. Nope, just kidding. July. Maybe. Come on, man. Come on. Kevin's losing millions every delayed second here. Thanks, Paul. Elon's practicing his SNL skit. Oh, man.
Our conference will begin momentarily. Thank you for your patience. Please continue to stand by.
It's on loop. That's it. For every minute, we have to start selling stocks that this call is late. Folks, I don't know what to tell you, okay? It's crazy. They're late. They're never late like this. 6 minutes late on an earnings call. You know how many pissed off suits there are out there right now? I mean, I'm pissed. I'm not even wearing a suit. But imagine the suits. They're like, yo, dogs, it's 5:30. It's beer time. It is not sit around and listen to Mozart or whatever this is. This is not, this is what you listen to when you're going to like an interview at Harvard because you want to go to their school and you're like in the lobby at the admissions office in Harvard. And this is
Standing by, and welcome to the Tesla first quarter 2021 results and Q&A website. At this time, all participants are in a listen-only mode. After the presentation, there will be a question and answer session. Please be advised that today's conference is being recorded. If you require any further assistance, please press *0. I will now hand the conference over to your speaker today, Martin Vieca, Senior Director of Investor Relations.
Thank you, Carmen, and good afternoon, everyone.
Volume good?
First quarter 2021 Q&A webcast. I'm joined today by Elon Musk, Zachary Kirkhorn, and a number of other executives. Our Q1 results were announced at about 1 p.m. Pacific time in the update deck we published at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events or results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please press *1 now if you would like to join the question queue. But before we jump into Q&A, Elon has some opening remarks. Elon?
Elon!
Great, thank you. So Q1 2021 was a record quarter on many levels. Tesla achieved record production, deliveries, and surpassed $1 billion in non-GAAP net income for the first time. And we've seen a real shift in customer perception of electric vehicles, and our demand is the best we've ever seen. So this is, we're used to seeing a reduction in demand in the first quarter, and we saw an increase in demand. That exceeded the normal seasonal reduction in demand in Q1. Model 3 became the best-selling mid-sized premium sedan in the world. In fact, I should say the best-selling luxury sedan of any kind in the world. The BMW 3 Series was for the longest time the best-selling premium sedan. It's been exceeded by the Tesla Model 3. And this is only 3.5 years into production and with just 2 factories. For Model 3 to be outselling its combustion engine competitors, I think is quite remarkable. In the past couple of quarters, we delivered roughly 250,000 Model 3s, so which translates to an annualized rate of 500,000 per year. When it comes to Model Y, we think Model Y will be the best-selling car or vehicle of any kind in the world.
Wow.
And probably next year. So
wow.
I'm not 100% certain next year, but I think it's quite likely. I'd say more likely than not that in 2022, Model Y is the best-selling car or truck of any kind in the world.
That's big.
And, with regard to full self-driving beta continues to make great progress. But this is definitely one of the hardest technical problems that exists, that's maybe ever existed. And really, in order to solve it, we basically need to solve a pretty significant part of artificial intelligence, specifically real-world artificial intelligence. And that sort of AI, the neural nets need to be compressed into a fairly small computer, a very efficient computer that we've designed, but nonetheless, a small computer that's using on the order of 70 or 80 watts. So this is, I think, a much harder problem than if you were to use, say, 10,000 computers in a server room or something like that. This has got to fit into a smallish brain. And this, I think, with the elimination of radar, we're finally getting rid of one of the last crutches. Radar was really, it was making up for some of the shortfalls of vision, but this is not good. You actually just need vision to work. And when vision works, it works better than the best human.
Your red
it's
candle
like having
sticking.
8 cameras. It's like having eyes in the back of your head, the sides of your head, and 3 eyes at different focal distances looking forward. This is, and processing it at a speed that is superhuman. There's no question in my mind that with a pure vision solution, we can make a car that is dramatically safer than the average person. So, but it is a hard problem because we are actually solving something quite fundamental about artificial intelligence. We basically have to solve real-world vision AI, and we are. So solving this is also having just a massive data set. So just having well over 1 million cars on the road that are collecting data from very sort of corner case rare situations. Sort of like so many weird things in the world, like a truck carrying a truck, or a car with a one example is a car, an actual example, a car with a kayak on the roof, where the kayak has a little weight dangling from the front of the kayak in front of the car, and yet the car must ignore this and just look at the road. So it's really quite tricky, but I am highly confident that we will get this done.
Fair point.
So yes,
when
this quarter, and I think we'll continue to see that a little bit in Q2 and Q3. So Q1 had some of the most difficult supply chain challenges that we've ever experienced in the life of Tesla.
Wow.
Insane difficulties with supply chain, with parts over the whole range of parts. Obviously, people have heard about the chip shortage. This is a huge problem. But then, in addition to that, for example, we had quite a bit of difficulty scaling drive unit production in China because we were unable to get critical engineers there because of COVID quarantine restrictions. So, which meant that Tesla worldwide was dependent on drive units made at our factory in Nevada, Nevada. So that was a very challenging situation. I think we're
more red
mostly out of that particular problem. But those are just two of many challenges. So the team's really done an incredible job of dealing with really severe supply chain shortages.
Fair.
So let's see, with respect to the Model S and X,
when
there were more challenges than expected in developing the
not good
Plaid Model S, or what's called the Palladium program, which is the new version of Model S and X, which has a revised interior and a new battery pack and new drive units and new internal electronics, and has, for example, a PlayStation 5 level infotainment system. There's just a lot of issues encountered. Ensuring that the new factory was super safe was quite hard because we're packing more energy in a smaller space. So it took quite a bit of development to ensure that the battery of the new SX is safe. And then we're trying to get all the details.
Elon?
In the cars slowly for the past few months, but we're just stacking them up in the yard and just making refinements to the cars that we've built. But we do expect to ramp Model S production and start delivering them probably next month. So and then to be in sort of fairly high volume production for the S in Q3 and to start delivering Model X in Q3 as well. So I think as we ramp up, I think probably the demand for the new SX will be quite high. So it's really just going to be a question of ramping supply chain.
In other words, don't get the early S and X because those have been backed up on the lot and they're making refinements to.
We're going to aim to produce over 2,000 SX per week. Perhaps, if we get lucky, upwards of 2,400 or 2,500. This again is contingent on global supply chain issues, which are just a lot of factors outside of our control here. But I do think these things will get sold, so it's just a matter of time. And then we'll be doing well over 2,000 SX per week. And it's a great car. It actually costs us less to produce, a little bit less to produce, but it is a superior product. So in conclusion, there's a lot to be excited about in 2021 and 2022. We're building factories as quickly as we can. Both Texas and Berlin are progressing well. We expect to have initial limited production from those factories this year and volume production from Texas and Berlin next year. At the same time, we're continuing to ramp production of Model Y in Fremont and Shanghai. In the background, we're continuing development work on the Semi, Cybertruck, the Roadster, and other products. Thanks to everyone at Tesla who made this year a huge success. Now on to questions.
Yes, that was fast.
Thank you very much. We have some remarks from Zachary Kirkhorn as well.
Okay.
Yeah.
Yeah, thanks, Martin.
Like, what about the financial remarks?
Team on breaking multiple records in the first quarter of 21, as Elon had mentioned, which is typically the most difficult of the year for many reasons. To summarize the quarter, I think it's best understood by three key items. First, we successfully launched and began the ramp of Model Y in Shanghai, achieving positive gross margin in the first quarter of production and receiving a great reception from the market. Second, as Elon mentioned, although we began the production process for the Model S during the quarter, we had not yet begun customer deliveries. The reduction in Model S and X deliveries from Q4 to Q1 were a meaningful headwind to free cash flows and profit generation. For example, we incurred an estimated $200 million of direct P&L impact relating to this program in Q1, the majority of which is reflected in COGS. And that's before even considering the impact of lost revenue and profits as a result of the transition.
Oh.
And as Elon mentioned, we expect the first deliveries to begin shortly. Third, as we continue to work through the instability of the global supply chain, particularly around semiconductors and port capacities, while the Tesla team, in partnership with our suppliers, did tremendous work keeping our factories running, we did experience high expedite costs in the quarter, and they were also higher than they were in Q4, with some minor interruptions to production over the
Getting a green candlestick on the $200 million in profit and loss impact and costs of goods sold due to the SNX being offline. So margin would have been even higher had they been online or just not costing money.
Auto gross margin, excluding credits, improved sequentially and year over year. This is in spite of the cost mentions for SNX and expedites and a reduction in global ASPs, as our cost structure as a company is reducing at an even faster pace.
Good.
So as we look out over the course of the year, we feel optimistic about our gross margin strength, particularly as some of these headwinds we're experiencing start to be resolved.
Good.
On services and other margins, these have recovered and are trending towards profitability, aided by strength in the used car business, operational improvements in service, and additional service revenue opportunities that help absorb fixed overheads. On energy gross margins, these remained negative for a second quarter. This is driven by solar roof-related ramp costs and winter seasonality in the lease PPA business. We continue to manage through a multi-quarter backlog on Powerwall. We're working as fast as we can to increase production, and this will aid in profitability of this business as those volumes increase. On operating expenses, these increased for Q1, which is driven by our investments in technology and growth. In particular for R&D, this includes the structural battery pack and 4680 cells, investments in the new SNX, and our neural net and silicon investments. On the SG&A side, we're setting up infrastructure and support for both China and EMEA in anticipation of volume to come there. And as I've said before, our plans show that we remain on track for sustained industry-leading operating margins. Double-clicking on cash flows, we continue to generate positive free cash flows, and this was despite the significant working capital headwinds from SNX. Additionally, we are making progress reducing various forms of debt. We also invested $1.5 billion in Bitcoin during the quarter, then trimmed our position by 10%, which contributed to a small gain in our Q1 financials.
They trimmed 10% on Bitcoin.
Generated $8 billion in operating cash flows and $4 billion in free cash flows over the past 4 quarters. As we look forward, our plans remain unchanged for long-term growth of 50% annually, and we believe we're on track to exceed that this year as we guided to last quarter. Global demand remains meaningfully higher than production levels, and so we're driving as fast as we can to increase our production rates. As we think about Q2 and Q3, these quarters should largely be driven by execution on SNX, as we've discussed, continued ramp of Model Y in Shanghai, and the associated cost reductions of these programs. And we expect profitability and cash generation to evolve over the course of the year in line with those improvements. And then as we get towards the end of the year, our story will pivot towards the launch and ramp of our newest factories in Austin and Berlin. So there's certainly no shortage of exciting things for us to work on and look forward to. Thank you, and we'll open it up for questions.
Thank you very much. And we'll first take retail questions from Say website. The first question is, how is Dojo coming along? Could Dojo unlock an AWS-like business line for Tesla over the next few years?
Answer someone. Someone's got to take the question. I didn't change anything.
Yeah, I'll jump in here. So, with respect to Dojo...
Sorry, Zach, my apologies, I was on mute.
Oh, go ahead, Elon. Yeah, it's just basically saying that although like right now people think of Tesla as a lot of people think Tesla is a car company or perhaps an energy company,
I think long term people will think of Tesla as much as an AI robotics company as we are a car company or an energy company. I think we are developing one of the strongest hardware and software AI teams in the world. Certainly, we appear to be able to do things with full self-driving that others cannot. So, and if you look at the evolution of what technologies we developed them in order to solve the problem of self-driving. So we couldn't find a powerful enough neural net inference computer, so we designed and built our own. The software out there was really quite primitive for this task, and so we built a team from scratch and have been developing what we think is probably the most advanced real-world AI in the world. And then it sort of makes sense that this is kind of what needs to happen, because the road system is designed for a neural net computer. Our brain is a neural net computer, and it's designed. The entire road system is designed for vision with a neural net computer, which is because it's designed for eyes in a brain. And so, if you have a system which has very good eyes, you can see in all directions at once. You can see 3 focal points ahead, forward, but it never gets tired or texting.
What?
It has redundancy, and its reaction time is superhuman. Then it seems pretty obvious that such a system would achieve an extremely high level of safety, far in excess of the average person. So that's what we're doing. Then Dojo is kind of the training part of that. So because we have over 1 million cars, and perhaps next year we'll have 2 million cars in active use, providing vast amounts of video training data that then needs to be digested by a very powerful training system. And currently, we use it's Tesla training software. So we developed a lot of training software, a lot of labeling software to be able to do surround video labeling, which is quite tricky. This means all 8 cameras simultaneously at 36 frames a second per camera, labeling video over time. There wasn't any tool that existed for this, so we developed our own labeling tool. Then taking it a step further, obviously the holy grail is auto labeling. So now we're getting quite good at auto labeling, where the trainers train the training system, and then the system auto labels the data, and then the human labelers just need to look at the labeling to confirm that it is correct and perhaps make edits. And then every time an edit is made, that further trains the system. So it's kind of like a flywheel that's just sort of spinning up. And really the only way to do this is with vast amounts of video data. So then we need to train this efficiently. So Dojo is really it is a supercomputer optimized for neural net training. We think Dojo will be probably an order of magnitude more efficient on say, I'm not sure what the exact right metric is, but say per frame of video, we think it'll be an order of magnitude more cost efficient in hardware and in energy usage per frame of video compared to a GPU-based solution, or compared to the next best solution that we're aware of. So then possibly that could be used by others. It does seem as though over time, I mean, just an observation, I think basically just a fact, that neural net-based computing or AI-based computing is more and more of the compute stack. Conventional computing, perhaps heuristics based computing, is still going to be important, still going to be very important, but it will become, but neural net will become a bigger and bigger portion of
I'll explain that.
Of compute. So anyway, that was a long story, but I think, yeah, probably others will want to use it too, and we'll make it available.
Okay.
Thank you very much.
That was
Let's go
one
to the
question.
second question from retail investors. The recent price changes on solar roof have been discouraging for customers and investors. Could Tesla share more about solar roof challenges and if the outlook has changed at all, i.e., 1,000 roofs per week?
Yeah, first of all, I should say that the demand for the solar roof remains strong. So despite raising the price, the demand is still significantly in excess of our ability to meet the demand to install the solar roofs. So production is going fine, but we are choked at the installation point. We did find that we basically made some significant mistakes in assessing the difficulty of certain roofs, but the complexity of roofs varies dramatically. Some roofs can be literally 2 or 3 times easier than other roofs. So you just can't have a one-size-fits-all situation. If a roof has a lot of protuberances, or if the roof the core structure of the roof is rotted out or is not strong enough to hold the solar roof, then the costs can be double, sometimes 3 times what's worth.
Right.
So in those cases, what we've obviously offered to do is to refund customers their deposit, but what we cannot do is go and just lose a massive amount of money. We just got to provide a refund of the deposit. But perhaps what is I think most important about the solar roof situation, which I tweeted about this past week, is that we're shifting the whole sort of solar situation, so the solar Powerwall, basically solar plus battery situation, to there's only one product, basically, or there's only one configuration. Every house, we will not sell a house solar without a Powerwall. That solar could either be solar retrofit, with conventional panels put on a roof, or it can be the Tesla solar glass roof. But in all cases, it will have the Powerwall 2. Technically, it's actually Powerwall 2 Plus, if you will. The Plus refers to a higher peak power capability. So basically, all Powerwalls made since roughly November of last year have a lot more peak power capability than the specification on the website. They have about twice the power capability, roughly. It depends on how you count power, but about twice the peak power, and about arguably twice the steady state power of the specification on the website. The energy is the same, but the power is roughly double. And all installations will have the Powerwall, and the difficulty of the installation will dramatically increase, or the difficulty of the installation will be much less. It'll be much easier because the power from the solar glass roof, or the solar panels will only ever go directly into the Powerwall, and the Powerwall will only ever go between the utility mains, or between the utility and the main power panel of the house, which means you never need to touch the main circuit breakers of the house. You never need to touch the house circuit breakers. Effectively, almost every house therefore looks the same electrically. instead of being a unique work of art and requiring exceptional ability to rewire the main panel. So this is extremely important for scalability. It's the only way to do it, really. And this also means that every solar Powerwall installation, that the house or apartment, whatever the case may be, will be its own utility. And so even if all the lights go out in the neighborhood, you will still have power. So that gives people energy security. And we can also, in working with the utilities, use the Powerwalls to stabilize the overall grid. So let's say that there's like there was in Texas, there was a peak power demand, and that peak power demand, because the grid lacked the ability to buffer the power, they had to shut down power. There's no power storage, no good form of power storage. However, with a whole bunch of Powerwalls at houses, we can actually buffer the power. So if the grid needs more power, we can actually then, with the consent, obviously, of the homeowner and in partnership with the utility, we can then actually release power onto the grid to take care of peak power demands. So effectively, the Powerwalls can operate as a giant distributed utility. This is profound. I'm not sure how many people will actually understand this, but this is extremely profound and necessary, because we are headed towards a world where, as we were just talking about earlier, where people are moving towards electric vehicles. This will mean that the power needs at homes and businesses will increase significantly. There will need to be a bunch more electricity coming somewhere. In fact, if you go full renewable electricity, we need about 3 times as much electricity as we currently have. So these are rough numbers, but you roughly need twice as much electricity if all transport goes electric, and then you need 3 times as much electricity if all heating goes electric. So basically, this is a prosperous future, I think, both for Tesla and for the utilities. Because, and in fact, I think this will be very, if this is not done, the utilities will fail to serve their customers. They won't be able to do it. They won't be able to react fast enough. And we're going to see more and more of what we see in California and Texas of people seeing brownouts and blackouts, and the utilities not being able to respond because there's a massive change going on with the transition to electric transport, and we're seeing more extreme weather events. This is a recipe for disaster. So it is very important to have solar and batteries at the local level at the house. In addition, it is important to have large battery storage at the utility level, so that solar and wind, which are the main forms of renewable electricity, that electricity can be stored, because sometimes the wind doesn't blow, sometimes it blows a lot, sometimes it blows too much, and sometimes it doesn't blow enough. But if you have a battery, you can store the energy and provide the energy to the grid as needed. The same goes for solar, because obviously the sun does not shine at night, and sometimes it is very cloudy. And so by having battery storage paired with solar and wind, this is the long-term solution to a sustainable energy future. And as I said, this really needs to occur both at the local level and at the utility level. If it doesn't occur at the local level, what will actually be required is a massive increase in power lines, in power plants. So they have to put long distance and local power lines all over the place. They'll have to increase the size of the substations. It's a nightmare. This must occur. There must be solar plus battery. It's the only way.
That was a long explanation on that. I'll summarize it later.
Thank you very much. And the next retail question is, Master of Coin, can you tell us anything about Tesla's future plans in digital currency space?
Ooh,
or
Dogecoin.
when any such major developments might be revealed?
Ooh.
Sure. Thanks, Martin. So as I noted in our opening remarks, and we've announced previously, so Tesla did invest $1.5 billion into Bitcoin in Q1, and then we subsequently sold a 10% stake in that. We also allow customers to make vehicle deposits and final vehicle purchases using Bitcoin. And so where our Bitcoin story began, maybe just to share a little of the context here, Elon and I were looking for a place to store cash that wasn't being immediately used, try to get some level of return on this, but also preserve liquidity. You know, particularly as we look forward to the launch of Austin and Berlin and uncertainty that's happening with semiconductors and port capacity, being able to access our cash very quickly is super important to us right now. And, you know, there aren't many traditional opportunities to do this, or at least that we found, and in talking to others, that we could get good feedback on, particularly with yields being so low and without taking on additional risk or sacrificing liquidity. And Bitcoin seemed at the time, and so far has proven to be a good decision, a good place to place some of our cash that's not immediately being used for daily operations, or maybe not needed till the end of the year, and be able to get some return on that. And, you know, I think one of the key points that I want to make about our experiences in the digital currency space is that there's a lot of reasons to be optimistic here. You know, we're certainly watching it very closely at Tesla, watching how the market develops, listening to what our customers are saying. But, you know, thinking about it from a corporate treasury perspective, we've been quite pleased with how much liquidity there is in the Bitcoin market. So our ability to build our first position happened very quickly. When we did the sale later in March, we also were able to execute on that very quickly. And so as we think about kind of global liquidity for the business and risk management, being able to get cash in and out of the markets is something that I think is exceptionally important for us. So we do believe long-term in the value of Bitcoin. So it is our intent to hold what we have long-term and continue to accumulate Bitcoin from transactions from our customers as they purchase vehicles. You know, specifically with respect to things we may do, you know, there are things that we're constantly discussing. We're not planning to make any announcements here. We're watching this space closely. So when we're ready to make an announcement on this front, if there's one to come, you know, we'll certainly let you all know.
Thank you. And the fourth question from retail investors is, does Tesla have any proactive plans to tackle mainstream media's imminent, massive, and deceptive clickbait headline campaigns on safety of autopilot or FSD? Perhaps specialty PR job of some sort?
I'll take this one, guys. From the safety side, I continue to say as Elon, safety is driving point and all. Go ahead, Elon.
I was thinking, please go ahead. I think it's special with just going through the facts of the I mean, specifically there was an article regarding a tragedy where there was a high-speed accident in Tesla that and there was really just extremely deceptive media practices where it was claimed to be autopilot, where this is completely false. And those journalists should be ashamed of themselves. Please go ahead, Lars.
Yeah, thanks, Elon. So I was just saying we're committed to safety in all our designs, and that's, you know, number one in what we do here. Regarding the crash in Houston specifically, we work directly with the local authorities, NTSB and NHTSA, wherever applicable, and whenever they reach out to us for help, directly on the engineering level and whatever else we can support. In that vein, we did a study with them to understand what happened in that particular crash, and what we've learned from that effort was that autosteer did not and could not engage on the road condition that as it was designed. Our adaptive cruise control only engaged when a driver was buckled and above 5 miles per hour. And it only accelerated to 30 miles per hour over the distance before the car crashed. As well, adaptive cruise control disengaged the car slowly to complete to a stop when the driver's seatbelt was unbuckled. through further investigation of the vehicle and accident remains, we inspected the car with NTSB and NHTSA and the local police, and we were able to find that the steering wheel was indeed deformed, so leading to the likelihood that someone was in the driver's seat at the time of the crash, and all seatbelts post-crash were found to be unbuckled.
Wow.
We were unable to recover the data from the SD card at the time of impact, but the local authorities are working on doing that, and we await their report. As I said, we continue to hold safety in a high regard and look to improve our products in the future through this kind of data and other information from the field.
30 miles an hour to a fiery
Okay.
crash?
Thank you very much. Let's go to the
That's
next
not good. That's
investors.
very slow. How did they die on 30 miles an hour?
Alternative grid storage technologies claim that lithium ion is unsuited for long-term
That's
storage
bad.
due to vampire drain. Could 4680 cells address this limitation? Is the limitation even relevant for charging the energy equation?
Yeah, just let me jump in on the vampire drain. That's definitely not the issue. A good lithium-ion cell self-discharges less than 0.001% of its energy per day. So it has, this vampire drain is maybe a non-sequitur. No. Yeah.
As mythical as vampires.
Yeah. Yeah, I think the challenge with seasonal storage is your value proposition drops from hundreds of useful full cycles per year to less than maybe 10 or maybe even less than 5 cycles per year. So it's just a different type of technology, altogether that would make sense, given that it's more than an order of magnitude different use case.
Yeah. I mean, we've got a long way to go before we're dealing with seasonal technology issues. But certainly a way to deal with seasonal technology would be to have wind and solar growing on the side of more southerly latitudes, but then across a variety of longitudes. So essentially, like let's say in the U.S., for example, if there was, I'm not sure if you'll understand that you can actually power the entire United States with just sort of roughly a 100-mile by 100-mile grid of solar. Sometimes people don't quite understand, like, well, how much solar is needed to power the United States? Almost nothing of the United States required to power the United States. And this is true of almost any country in the world. The solar incidence is a gigawatt per square kilometer. This is insane. In fact, if you took the clear area, just the area, for nuclear power plants, the area that is considered not usable because a nuclear power plant is there, in most cases, if you just put solar there, it would generate more power than the nuclear power plant. This is because they typically have pretty wide clear areas. If you have, say, 25% efficient solar panels, and then those are 80% efficient in how they're laid out, you're going to do about 200 megawatts per square kilometer. Therefore, 5 square kilometers is a gigawatt, which might be a typical sort of power plant. It's really not much area at all, and a lot of places can have wind and solar same place. So anyway, it's entirely possible to power all of Earth with a small percentage of Earth's area, and then to transmit that power through high voltage DC lines. No new technology. No. You don't need room temperature superconductors. This is also another myth. Room temperature superconductors, almost irrelevant in my opinion. Almost irrelevant. Low cost, long distance power lines using copper or aluminum, very important. So heating is I squared R. So that's current squared times resistance. So as you increase voltage, you can drop the current dramatically and drop the heating dramatically to the point where it is of minor relevance. Like maybe you lose 5 to 7%.
That's what Lucid does.
DC power line, something like that.
More voltage.
So I want to be clear: no physics is necessary, no new materials is necessary. We just need to scale this thing up. We have the technologies exist today to solve renewable energy. And sometimes people say, well, why don't we do it? That's because the energy basis of the Earth is gigantic, super mega, insanely gigantic. So you can't just go and do a zillion terawatts overnight. You've got to build the production capacity for the cells, for the battery cells, for the solar cells. You've got to put that into vehicles. You've got to put that into stationary storage packs. You've got to put that into solar panels and solar glass roofs, and you've got to deploy all this stuff. But it is certainly the case that we can accelerate this, and we should try to accelerate it. The right thing to do, I think, from an economic standpoint, and I think almost any economist would agree, is to have a carbon tax, just as we have a tax on cigarettes and alcohol, which we think are more likely to be bad than good, and we tend to tax fruit and vegetables less. Well, the same should be true. We should tax energy that we think is probably bad, and support energy we think is probably good, just like cigarettes and alcohol versus fruits and vegetables. It's just common sense. But I guess on the plus side, I'm not suggesting anyone be complacent, but sustainable energy, renewable energy will be solved. It is being solved, but it matters how fast we solve it. And if we solve it faster, that's better for the world.
Thank you very much.
Can somebody replay the 30-mile-an-hour part? Was it 30 miles an hour with autopilot engaged, like that's the max, or did they crash at 30 miles an hour?
I think the bias will tend to be towards iron-based lithium-ion cells. When people say lithium-ion, people think lithium must be a big constituent of the cells. It's more like 1 to 2% of the cell is lithium. The main part of the cell is the cathode. The main mass and cost in the cell is the cathode. For high energy cells, like for example, what we use in most Teslas have nickel-based lithium-ion cells, which have higher energy density, longer range than iron-based cells. However, for stationary storage, the energy density is not as important because it's just sitting on the ground. And so I think the vast majority of stationary storage will be iron-based lithium-ion cells with an iron phosphate cathode, technically. But I think the phosphate part is unnecessary. It's really just iron or nickel. Unnecessary in the terminology. Just think of it as iron and nickel. And there's an insane amount of iron in the world. More iron than we could possibly use. And there's also more lithium than we could possibly use. Basically, there is no shortage of anything whatsoever in iron phosphate lithium-ion cells.
Thank you very much. Let's go to the next question from institutional investors, which is, you've suggested that between a 5x to 10x improvement is achievable in the automotive production versus the first Model 3 line on the first principles physics analysis. Where does Berlin sit relative to that limit?
Oh, I think we're still quite far away from it. I mean, the thing to bear in mind with production is, for those who've never done production, they just don't understand how insanely hard production is. I want to really be very, very emphatic here. Prototypes are trivial. They're child's play. Production is hard. It is very hard. Now you say production at large scale with high reliability and low cost.
Okay, that's what I thought, that they're saying that it was 30 miles an hour if the auto steer was on. Okay, got it.
the truly profound thing on the car side is that Tesla was the first American car company to achieve volume production of a car in 100 years and not go bankrupt. So this I basically, myself and many others at Tesla had to basically have several aneurysms to get this done. It was so hard. So anyway, and the thing about making a large complex manufactured object is, let's say you have first order approximation 10,000 unique items. Even one of those items is slow. That sets your weight. One. Doesn't matter how so trivial. We've had production stuff because of carpet in the trunk. We had production stuff because of a USB cable. At one point, for more or less, we literally raided every electronics store in the Bay Area. For a few days there, nobody could buy a USB cable in the Bay Area because we went and bought them all to put them in the car. Literally. And there's like hundreds of stories like that. So anyway, that's the solving those constraints and a logistics problem that makes World War II look trivial. I'm not kidding. Like, the scale is insane. We're talking millions of cars, massive global supply chain, 50 countries, dozens of regulatory regimes. It's insane. So, yeah.
Thank you. And the last question from institutional investor is, Master Plan Part 2 talks about an urban transport vehicle that is smaller than traditional bus with greater aerial density achieved by removing the central aisle. Do you have any updates to share on this goal?
Not at this time.
Okay.
Okay, thank you very much. So let's move to analyst Q&A.
Thank you. First question is from Pierre Ferragu with New Street Research. Your line is open.
Hi, guys. Thanks a lot for taking my question. I'd love to get actually an update on what you presented on the battery day. In the last 6-7 months, I was wondering how much progress you've made on that front. First, in terms of process development, so how are things coming together on your pilot line? Are you getting to the kind of production throughput you were aiming for? And second, actually on your production ramp. So I was wondering in which sites you're ramping production capacity for the 4680 cell, and where you stand on ramping up that capacity as well. And I'll have a quick follow-up on energy as well, if that's possible.
Well, so we have the, and Kurt closely add to this, but we have a small sort of pilot plant, which is still big by normal standards, expected to have like a 10 gigawatt hour per year capability in Fremont, California. And we've made quite a few cells. We're not quite yet at the point where we think the cells are reliable enough to be shipped in cars, but we're getting close to that point. And then we've already ordered most of the equipment for battery production in Berlin, and then much of it for Austin as well. So we're really down to like the nitty-gritty elements. But overall, I think we still feel quite optimistic about this achieving volume production of the 4680 next year.
Okay.
Yeah, thanks. Okay. Yeah, thanks. Just one thing I would add is there's been a lot of questions about yields. Actually, I noticed people asking about that, and the yield progress has been really strong every day. When we were really still in commissioning phase with most of the tools. to the point where we're confident that the yield trajectory aligns with our internal cost projections. We did talk about yield also at Battery Day, which is one of the reasons why it's useful to check in on that. It takes a while, as Elon just mentioned, to go from prototype to production, and it's not just parts, it's processes, it's equipment. But as we've matured those pieces of the process equipment, we've gotten to where we need to be on the yield side.
Yeah, and basically, this is just a guess because we don't know for sure, but it appears as though we're about 12, probably not more than 18 months away from volume production of the 4680. Now, at the same time, we are actually trying to have our cell supply partners ramp up their supply as much as possible. So this is not something that is to the exclusion of suppliers. It is in conjunction with suppliers. So yeah, we want to be super clear about that. This is not about replacing suppliers. It is about supplementing suppliers. So we have a very strong partnership with CATL, with Panasonic, and LG. And our request to our strategic partners for cell supply is please supply us with as much as you possibly can. Provided the price is affordable, we will buy everything that they can make.
Yeah, and specific to that, we're on track to more than double the supplier capacity over the next 13.
Yeah, exactly. We do expect from suppliers willing to receive double the cell output next year versus this year.
Yes.
Okay. And I had a quick follow-up on maybe Zach for you on your energy business. So I understand like the negative gross margin with solar roof RAM, but I was wondering, what do gross margin look like there when you look at the storage business, and where what's your ambition in terms of gross margin in that business? It's going to grow in the mix in coming years, so it's important for long-term modeling.
Yeah, we're seeing a lot of.
We're aiming for comparable margins in storage as in vehicle.
Wow.
But it is important to bear in mind that vehicle is more mature than the storage. So
wow,
we already are at good margins with the Powerwall. But some additional work is needed for the Mega Pack to achieve good margins. Yeah. Drew, what do you think?
Thank you.
Yeah, sorry, just jumping in, Elon. Absolutely agree. Yeah, Powerwall is mature. We've been producing Powerwall 2 for 3 years now, and we're at good margins there. But Mega Pack has more room to go to achieve our targets.
But we have a clear runway for improving the cost per the megawatt hour of the Mega Pack.
Absolutely, yes, we do.
Thank you. Let's go to the next question, please.
From Rod Lackey with Wolfe Research, please go ahead.
Hi, everybody. I was hoping maybe just first you could talk a little bit about how you're thinking about the rollout of version 9 of FSD and the transition to the subscription model. It sounds like some of this is about to roll out next month. I'm not sure if that's the subscription model, but maybe you could just spend a little time talking about how impactful you expect that to be.
Sorry, go ahead, guys.
Yeah, we're working on getting FSD subscription out. There's a couple of internal technical dependencies, but from a business model perspective, that's aligned, and we're hoping to roll that out soon. The key thing that I say here, there's a lot of potential for recurring revenue based on an FSD subscription. If you look at the size of our fleet and you look at the number of customers who did not purchase FSD up front or on a lease and maybe want to experiment with FSD, this is a great option for them. One of the things we'll need to keep an eye on is a potential transition from cash purchases of FSD subscription over to, or cash purchases of FSD who may move over to FSD subscription. And so there could be a period of time in which, you know, cash reduces in the near term, and then as the portfolio of subscription customers builds up, then that becomes a pretty strong business for us over time. But we're hoping to get this launched pretty soon and see what the response is to it.
Okay, great. And was hoping, Zach, maybe you can just talk a little bit about OpEx. There was a noticeable increase, even excluding SBC. Obviously, a lot going on this quarter, but can you maybe just talk a little bit about how we should be thinking about that going forward?
Sure. On the R&D side, you know, what we're seeing, as I mentioned in my opening remarks, is kind of a convergence of a series of programs that are happening. And our R&D OpEx spend kind of correlates to where we are in the product life cycle on different programs. And so we're, you know, kind of at the tail end of investments in what we call internally Palladium, which is the new Model S and Model X. And so we expect that to decrease over time, but it was high in Q1 for a lot of the reasons that Elon had mentioned. You know, we're also getting very heavy into 4680 development that Drew and team are working on, and the associated structural battery pack that goes along with that. And so these are new technologies, not only new to Tesla, but new to the industry. And so we're investing heavily there on an R&D side to work out those kinks. And, you know, spend along in those areas, you know, should continue over time as we continue to work through the development cycle of those. And then I also mentioned, you know, Elon talked a bit about, you know, Dojo and the potential there. So from neural net investments and custom silicon investments, these continue to be areas that we spend on and make investments in. On the SG&A side, you know, the business is pivoting very quickly to be global, and China is ramping quite quickly. And we're trying to make sure that we are staying ahead of the volume so that we have the right sales capacity, store capacity there, local investments in IT and others to manage the growth, such that as the growth comes, the execution challenges are smaller than maybe in similar periods of growth that we've seen in the past. And so we're making investments there ahead of the growth. And overall, as we look at OpEx as a percentage of revenue over the course of the year, we do expect to see a substantial drop from 2020 to 2021 as the volumes in the latter part of the year pick up.
Thank you. Let's go to the next question, please.
Thank you. From Dan Levy with Credit Suisse, your line is open.
Hi, good evening. Thanks. Two questions. One is on COGS. I think we've gotten from Battery Day a pretty good feel about the potential for COGS reduction related to powertrain, but I'd like to get a sense of the path to reducing COGS X powertrain, as you'd still need a meaningful reduction on that front to make the math work on a $25,000 vehicle. So what levers do you have to reducing your cost X powertrain? Is it just more scale, better supplier pricing, or is it just based on ongoing cost reductions?
Good question. Basically, how are you going to get to that better gross margin?
Sure. I mean, I think all of the above.
Oh, really, Elon?
Yeah, I mean, on the vehicle side, there's plenty of opportunity as well. Obviously, building a car like a Model S is quite complex and has various moving parts. Model 3 and Model Y were steps of improvement in that. But when you look at some of the other advancements that we're including in the Model Y factories into Austin and Berlin, we've reduced the body part count by as much as 60%, and the part costs money. So we continue to find optimizations there, as well as we get economies of scale when we start to talk about the volumes we're considering worldwide with 4 factories building the same vehicle. So both of those things on the vehicle side will improve our COGS as well, and the powertrain continues to be integrated into that.
Great. Berlin and Austin ramp, but I'd like to just get a sense on the comparison of Fremont versus the new capacity. Obviously, Fremont's non-optimized because you bought, the old NUMMI facility. You had to retrofit that to your needs. So maybe you can give us a sense of how your new capacity is going to differ versus Fremont. What are the areas that you have efficiencies that you previously didn't have, and maybe how much does that add up to improved COGS over time to help you achieve that $25,000 vehicle?
Yeah, I don't think we don't want to talk too much about future product development. The earnings calls are not the right place for to make major product announcements.
Okay.
So yeah, we'll get there, but we'll talk about it later.
Come on.
Oh, all right. Thank you very much. Unfortunately, this is all the time we have for today. Thank you very much.
I'm going to do a summary.
And we'll speak to you again in about 3 months. Thank you.
Thank you.
This concludes today's conference call. Thank you.
I don't know. That was a little rough. Tesla stock down 2.26%. Obviously, it was a tough quarter, but let's go ahead and do a summary here. So we'll go through my notes. Boy, that was a long one. Alrighty. So I'm going to go to the top of my notes here, and we're going to do a summary. All right. Who's ready for a summary? Oh, I'm not. Okay. All right, here we go. Here we go. Circle backy time. That's right. All right. We'll start out like a new video. Let's change this a little bit. There we go. Actually, I don't even need this right now. I'll take this off really quick. It's so annoying, this little wire. Okay. Let's do a summary. All right, here we go. Hey everyone, me Kevin here. So here's a complete breakdown of what we learned from the Tesla earnings call. So it's a summary of it. First, Elon Musk came out, talked about the highest demand that we have ever seen for vehicles at Tesla. That the Model 3 at Tesla is on pace to produce 250,000 vehicles. It's actually producing 250,000 vehicles at its current rate, and its rate will be at 500,000 Model 3s per year next year. So that rate of production for Model 3s is expected to double. The Model 3 currently one of the best, or actually the best selling premium sedan in the world, but expecting the Model Y, Elon said this, to become the best selling vehicle of any time next year, but more likely by 2023, beating all other cars or trucks. Great progress on full self-driving. We'll talk more about that later. Elon talked about some of the challenges about how you need a very powerful computer using only 70 to 80 watts. Talked about how important of a step it is to eliminate the crutch of having radar as a tool that you use to sort of back up your visual or vision systems in the autonomous systems. So Elon wants a superhuman stereo video autonomous system that can basically look at 8 cameras, 35 frames per second data all at the same time, and then with context of all the cameras coming together at the same time, be able to label what's going on surrounding the vehicle and make decisions without the use of radar or certainly LiDAR. The word LiDAR wasn't even mentioned once on the call. He talked a little bit about some difficulties regarding this, also talked about some of the difficulties regarding the Model S and X, about how there were more challenges than expected. Remember, they're completely tearing out the inside, redoing the inside. They're doing the new battery, new drive units, new internal electronics, PlayStation 5 level infotainment system, and that they've had lots of issues. Elon Musk also touched on, and I thought this was a little bit weird, but basically what they're doing is, because they're not done with some of the S and X's, the first ones that they're producing, or probably the new Model S's, they're kind of backing them into the yard and then putting them back into the factory to kind of keep making modifications to them. I have to say, that struck me as a little odd. Their goal is to produce 2,000 S and X's per week, potentially as high as 24 to 2,500 S and X's. And that these, when they are done, will be superior vehicles. And they expect to get to volume soon. They expect to start deliveries next month of the S. The X will come later with new deliveries, and that they hope to get to full volume on the S and X by next year. That puts them on pace for somewhere around, let's see if we do 52 weeks times 2,000, that puts us around 104,000 vehicles on the low side per year for S and X's. That'll certainly help the average vehicle selling prices go up substantially. And on the high side, we expect potentially as many as 130,000 S and X's to be produced and built. On financials, obviously there was a big impact on profits. The big line here, so that you can do some math, was that $200 million of extra loss was baked into quarter one revenue or quarter one expenses into their cost of goods sold and automotive revenues, or I'm sorry, automotive expenditures, due to the S&X re-ramp, the retooling. Cost $200 million. And that's not even to mention the lack of revenue. And despite this, automotive gross margins still went up. So in my opinion, that's really good news. But Tesla after hours after this earnings call is settling down about 2.33%. Most folks are not too excited about how the earnings call went, though this particularly, in my opinion, was a very strong moment here, and the candlesticks did start greening at the time of this reveal as well. They also indicated that research and development expenses increased because of their continued development on the 4680 cells, the new battery packs, artificial intelligence, and the S&X retooling. So it looks like you've got some operating expenses going into the S&X process itself, like the factory line retooling, but then also research and development expenses going into the S&X. So a lot of extra expenses here. They talked about trimming about 10% off their Bitcoin position, but they talked about how they do plan to still invest in Bitcoin for the long run and convert more of their vehicle purchases from Bitcoin into Bitcoin that they hold for the long run. They did sell 10%. They said that this was just for liquidity purposes, that they want something that they can easily buy and sell through. On the Dojo supercomputer, Elon Musk went into a very detailed explanation here, and I kind of gave you a little summary already with that 8-camera simultaneous labeling. That's where they want to get to in the future. Remember, we've done this before on this channel. You know those Matterport 3D scans that I show you on this channel? I love Matterport. I love the technology. Matterport does this as well, where they scan a place and then their artificial intelligence starts automatically labeling. Oh, okay, I think this is a smoke detector. Oh, that's a door. Okay, that's this or whatever. That's going to be huge for insurance purposes, right? Public company, GHVI, well, it's a SPAC merger. But anyway, Elon is trying to do this on the fly. So like in real time as a car is moving, and then have a system be able to automatically label, okay, that's a kayak on top of a car. That's a truck on top of another truck, and be able to label these things. But these things are challenging. And so we gave some examples about how basically they're writing the software that's trying to start auto labeling, and that trainers then go through and fact check. No, that's not a donkey. That's a car or whatever. And then when they make those edits, they actually help train the system even more. But basically they expect that Dojo in the future could potentially even be used by others. But keep in mind, we did see Toyota bail on that rumor that we saw a few months ago that Toyota might want to partner with to use Tesla's autonomy system, but recently bailed on that. My assumption they bailed on that Tesla talk because Toyota instead today bought Lyft's self-driving products, which I didn't even know that Lyft had a self-driving product. On Solar Roof, they say that demand is still in excess of what they can produce. There was a question about why is it that people are getting much, being asked to basically pay double for the roof. Elon Musk kind of talked this up as being more of an issue with people's roofs, that Elon's going, or the staff's going to a roof and they're like, come on, man, like your roof is totally rotted out. It's going to cost twice as much to do this. Keep in mind, I have had this experience with Tesla myself, not on the solar roof, but on the solar panels. Basically, I asked for a panel. They come out, and the roof, in my opinion, looks fine, not leaking. I've had my roofs certified by licensed roofers. They do tune-ups on my rental properties. Tesla will go out and go, we just don't want to put a 20-year solar panel on this roof. We want you to replace the roof, or we want you to replace half the roof, or whatever. And then they give me a fat sort of contractor estimate that they can subcontract to. Tesla probably gets some decent amount of profit from doing that by taking a little bit of a spread for that referral purpose. But yeah, that's been a common issue with Tesla, is you kind of getting the upcharge bill from the contractors. But that is the nature of construction as well. So on one hand, I don't blame them. I mean, they don't want to get suckered into, putting their panels or even solar roof on top of crap lumber or whatever. But and on the retrofit panels, they put a 20-year panel on, a roof that only has 5 years left. I get it. That could create some problems. Anyway, in those cases, Elon Musk says they just refund deposits. Okay, fine. A big thing about the solar discussion, though, was about simplifying the installation of solar panels. And so this was a little tricky. I'm going to make this as simple as possible. And honestly, I think the easiest way to explain the what Elon Musk is talking about when it comes to why Elon Musk wants the solar battery pack included in the solar system is just by doing a very quick rudimentary explanation here. So generally, if somebody wants solar panels on the roof and they have a main circuit panel over here and you want to add solar panels on the roof, you're going to have something known as an inverter that gets installed. And then generally you need a few breakers free in the panel, which when you need a few breakers free in the panel to power that or to connect with that inverter, you have to do a lot of rewiring inside of that main panel. And so what they're doing instead is saying, well, if we have a power wall and we install a power wall, so we'll just go ahead and put PW here for power wall. Well, we're going to have an actual sub panel over here for the power wall. And what we're going to do is we're just going to feed all of the circuits that are supposed to be backed up by the that are wiring through this panel. We're going to splice off those, go into this sub panel, and then the power wall is going to go over here. So all of a sudden you have a very, very simple way to install solar where you don't have to screw around with rewiring the panel because you're trying to jam some new breakers in there. What you're really doing is you're just routing off of the main into this new sub panel and letting the power wall feed those circuits. Keep in mind, the power wall does not have to feed every single circuit in the house, just whatever circuits either the system was designed for. So that's my overly simplifying, not an electrician here, understanding of a simplified, explanation here on what's going on. So in other words, Elon Musk is basically saying, look, it's much easier for us to install the power walls on every solar system. On top of that, we make much more money. And that's also a very good motivation. Now, Elon Musk did give a long-winded explanation about how having batteries in houses is actually really important because people are using more electricity because they have electric vehicles now, and we have bad weather that can cause more issues and more outages and more strain on systems, blah, 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 blah. Basically, Elon Musk is saying, yo, we putting power walls in now with our solar panels, like it or not, okay? It's that freaking simple. All right, we already talked about the coin. No new announcements on like Dogecoin or whatever. All right, then we get to this crash in Texas, okay? This crash in Texas, folks, this explanation was the most garbage explanation they could have possibly come up with. But I think we have a conclusion here as to what roughly they said. So, and I tweeted this as well. So roughly, our understanding is that auto steer, which is basically autopilot when you don't have the full self-driving, auto steer would have only accelerated on the road where the accident happened to 30 miles per hour. This implies, given that the car burst into flames, which you do not expect to happen at 30 miles an hour, this implies the car was not on auto steer. So it probably means somebody launched the car. Like, let's go 0 to 60, let's go. Because again, remember what I said, with that fiery crash, I'm expecting it to reveal that this car was going at least 50 to 60 miles an hour, if not even 70 to 80 miles an hour, but at least 50 to 60. So when I had 30, I initially got a little concerned, confused. We re-listened and rethought about what was said. So that's where the 30 mile an hour limitation come from. So this does imply that the car was traveling faster without auto steer on. We did not get an indication of the speed of the crash, and that seatbelts were found to be unbuckled. Now, we do not know if the seatbelts were unbuckled at the beginning of when they started driving, or if the seatbelts were unbuckled after the crash. We do not know that. The seatbelts were just found unbuckled. However, there is an indication due to a deformed steering wheel that somebody was in the driver's seat at the time of the crash, which, and think about it, if somebody was in the driver's seat at the time of the crash, and let's say they were unbuckled, you would probably have a lot of mass going into that steering wheel, leading to some deformment. Now, you would expect the airbag to go off, so I don't know the mechanics of airbag versus body going into airbag versus still deforming the steering wheel. I don't know. Obviously, I would expect the deforming of the steering wheel to be a lot worse if the person was not buckled up, obviously, but we don't have that answer. And they did mention that the SD card, which does record data on the car, was not able to be recovered. However, it is they are working on trying to recover data from that SD card. Then we've got on 4680s, they dispelled some rumors about vampire drain. They talked about how lithium-ion batteries are only really 1% to 2% lithium, and that there's no shortage of iron phosphate lithium batteries. Iron phosphate batteries are the cheaper ones. The 4680 ones are the iron phosphate ones are the ones being manufactured in China. A lot of the Teslas have those. The 4680s are the new structural batteries, and those are the ones that they're trying to ramp. They're really expecting to get to volume production next year on the 4680s, but they do think, that reiterates, they do expect it's going to be 12 to 18 months, which again does align with next year. They are aiming for comparable margins. This was a big one. Comparable margins in storage as they are in a vehicle, which is great because vehicle margins, they're aiming for 30%. But Elon Musk mentions, look, Megapacks, Powerwalls, we're nowhere near scale yet, but we are expecting margins to eventually approach what the vehicle manufacturing margins are, which that's 20 to 30%. Honestly, that's a lot higher than the margins that I had been giving for energy. So I think that's great. However, I expect that to decline as they continue to do solar panel installs, because solar panel installs are low margin, but the batteries are higher margin. On full self-driving subscription, still working on it. Maybe they'll do recurring revenue in the future, but too soon to make any announcements on the conference call. On getting to a $25,000 vehicle, Elon Musk mentions, and the other staff mentions, look, there are many things we can do, reducing the amounts of pieces that go into a car, obviously streamlining the pieces that are used in conjunction between all the different cars, continue to find cost reduction scale, the volume of having 4 factories building the same vehicles, all that helps. And on Berlin and Austin ramp, we'll get there. No real news here. I think the big takeaway from what we got from Tesla today was really no news. Unfortunately, a lot of today was no news, a big no news day for Tesla. Not so great. It's kind of more of a hurry up and wait. And I think that's why we're seeing some negativity in the stock, especially with that average selling price declining as the S and X's aren't being produced. Obviously, when you take very expensive cars like $80,000 to $100,000 cars out of your product mix, your average selling price will naturally decline. So there you go. There you have a complete summary of what the heck happened in the earnings call, as well as a little bit with the earnings. If you found this helpful, consider sharing the video, subscribe, check out the amazing programs linked down below if you'd like the way I explain things on building your wealth, whether through real estate investing, stock investing, sales, making YouTube videos, property management, rental renovations. You can even bundle them all together. That coupon code is expiring soon. Thank you so much for being here, everyone. I appreciate you all. I'm off to play Minecraft with Jack now. Thanks so much, and we'll see you in the next one.